Compliance Officers Conclave, co-partnered by ACME. Now I'll ask our dignitaries to be on the stage for our inaugural session. Mr. Hegre from ACME, Mr. G.T. Mamin, ED and CEO of Sa-Dhan, Mr. Shaliman, MD, IDA Financial Services and ex-board member of Sa-Dhan, Mr. Dwarkan, ex-officio member, Bengaluru chapter, ICSI. Welcome, sir. Now I will request Mr. Hegre, CEO ACME, to give the welcome address.
Welcome all of you for today's Compliance Officers Conclave, mainly arranged by Sa-Dhan in association with ACME. You know, Sa-Dhan is one of the premier proactive SRO in the country, taking up so many policy issues with the Government of India, regulators, etc. ACME, Association of Karnataka Microfinance Institutions, is a state association. We are having a membership of around 30 of MFIs operating in Karnataka. We touch with local bureaucracy and other stakeholders in Karnataka. You know, regulators, for the purpose of transparency and keeping the client protection, they keep coming out with so many regulations. If at all we fail to comply with regulations, we will have it. Heavy penalty will be there. Sometimes very extreme steps will be taken. So all the more compliance becomes all the more important. Similarly, compliance officers is very, very important. Today for the conclave, we have with us Mr. Shaliman, very experienced veteran, one of the legends of microfinance in Karnataka. In fact, these are the people who started our ACME about 17 years back. And because of ACME, I am proud to say that microfinance operations in Karnataka is, compared to other states, is smooth. He was in the board of Sa-Dhan. He was chairing ACME for 3 times. Even at present also he is a member, executive committee member in ACME. I, on behalf of Sa-Dhan, on behalf of ACME, and on behalf of all of you, wholeheartedly welcome Mr. Shaliman sir. Mr. Dwarkan is a board member, ICSI, Institute of Company Secretaries of India, which is an educational institution churning out company secretaries every year. So, very experienced people like Mr. Dwarkan sir is with us today. We will listen to him from horse mouth what is compliance, and that is the advantage for us. I, on behalf of all of you, I welcome you. And GG sir, you know, part of course, Sa-Dhan, but still it's a formality that
compliance officers may be
you know, Sa-Dhan, he generally go to Government of India, RBI, so many regulators, taking up power issues, sector issues with them. I think it has been very easy for him because of his earlier position in Government of India's one of the flagship program, that is Mudra. He was heading Mudra, and that's how probably he is able to have that much of good relation with Government of India, DFS and regulators. I, on behalf of all of you and on behalf of ACME, I extend a warm welcome to Gigi sir. And with us, there are so many seniors, panel speakers. I don't want to again individually name them. All seniors are there, experienced people are there. I once again welcome all of you for the program. Hearty welcome to all of you. Thank you.
I will request Mr. Gigi Namin to give the inaugural address.
All of you, a very warm welcome to today's Compliance Officers Conclave, organized jointly by ACME and Sa-Dhan. On the dais we have eminent personalities like Dwaraganathan ji, we have Salimat ji, Hegde ji, and of course we have seniors like, as Hegde ji said, you have senior persons from the sector assembled here. I welcome each one of you for this conclave, and I'm really happy to see that people have come from all the places, from across the country, from different places. Really thankful to all of you. In fact, this is the third initiative we have done in the last 15-20 days, which has been basically to see how sector can be further strengthened. As you all know, we did a HR conference in Chennai, which was also very well attended, and where people from different parts of the country came. We really deliberated on some of the pressing issues of HR, which we all of us are knowing. We have seen that HR has become a major pain for many of us because of the higher attrition rate. Today you are seeing attrition rate going above 50-60%. And I was shocked when I was talking to one of the MFI, a smaller MFI, but still, that MFI was telling me that, the CEO was telling me that every year the entire field officers get changed. 100% attrition at the field officers level. Very, very shocking, I feel. We have to do something to stop this. In the sense, we can't completely, contain this. That's not record also. That's not a good also. Definitely, a level of attrition is good. You have fresh people coming into your system, and the older ones can also go out and get better positions. That's a good thing to happen. But if it goes above 50-60%, every 1 year, 2 years, you get a new set of people. I think that's not good for the industry. We need to work on that. We need to create a better working environment, and we need to give a better work-life balance for our team. Then only people can stay with us and work with us. That was one. We, as a part of that itself, as a continuation of that, we had a meeting with IIBF, Indian Institute of Banking and Finance at Bombay. The CEO and the senior team members were there. Basically, we were thinking how to strengthen how to improve the capacity, how to do the capacity building of our existing team members. Because basically training is an area which is probably, I feel, it is lacking a bit, and that is one of the reasons why larger attrition is also possible. So I was discussing with them to see how best we can improve the capacity of the existing staff. Based on that, I have sent a mail to all the CEOs of all the MFIs also, how we can improve this position. It can be done only with some kind of a incentivization. Let me also make it very plain. Because for me also, let me tell you, I have passed, even Hegde some must have passed, because we are from the banking industry basically. There are two parts of a certification course called the CAIAP. Part 1, Part 2. Each part, when you pass, the bank will give you one increment, additional increment. So that was an incentive. Similar kind of some incentivization is needed for people to go in for better capacity building, for taking up better training programs, or doing some kind of. Marisa, come, please come. Come here. So, welcome. I was saying that, so we had a meeting with them, and one is the existing staff, how to improve the capacity. Second is that how to widen our universe of people available for the microfinance sector. Right now, we have around 2.25 lakh of staff, that is the data shows. We are working around these people only. How do you expand this? If you suppose there are around 3 lakh, 4 lakh people available for working for microfinance sector, your attrition level also will come down. You will have better options also. So we were asking them whether we can do a certification program for the unemployed youths who can take up this program, do a certification, and be ready for joining the microfinance sector. So a list of trained persons will be available in every state, which can be made use of by the MFIs to recruit them. But there also probably we need to do a little more than what is we do normally for a new recruited staff. Maybe we have to do a little more than, because they are taking pains to do a training program before IT. So this is something we did, and this is the third one we are doing in that series, the compliance officers program. And compliance officers program, I don't have to say this of the importance of the compliance officers, because it's very, very vital as far as the financial health, the financial, creating a healthy financial environment in the country. I was just going through some of the literatures, so because basically this is more a technical one, so I thought I should not be just giving something out of anything. So I was going through some of the literatures. See, one of the things which says that compliance is an obligation to ensure financial institutions continuously comply with legislative and regulatory provisions, professional and ethical standards and practices, code of conduct including ethical codes and internal practices. So it is not just obeying certain rules of RBI regulations or just taxation rules or some companies act. There is a lot of things involved in the compliance. When you say you are compliant one, it's not just limited to only one aspect. It is about the regulatory provisions, it is about the ethical standards, it is about the code of conduct and internal practices. What will happen suppose we don't comply with that? If you are not complying with this, there is a non-compliance risk. The risk of legal, regulatory and disciplinary sanctions. In fact, I was just going through that. There are several things of risk, which is there as far as non-compliance is concerned. First of all, there is a damage of reputation. There is a financial loss. If the regulator puts some kind of a penalty, there is a financial loss. There can be closure of business. We have seen recently how the regulator has been very strict about certain things. Certain line of business they stop because certain things of compliances, non-compliances. We have seen an entire institution was asked to stop their activities because of non-compliances. So closure of business, seizure of license. Ultimately, it can be seizure of license. You can be stopped. Your license can be stopped. So basically, non-compliance are causing a huge damage to the organization. So that is why we need to become more compliant. In case of MFIs, we have seen that MFIs have to comply with several set of compliances. One is of course the regulatory compliances of Reserve Bank of India, the Corporate Affairs or the Companies Act, Ministry of Corporate Affairs, that is the Companies Act, tax compliances, IT, GST, Shop and Establishment Act, the State Government Act, labor laws, minimum wages, because I have seen in some of the wages, I was just seeing the wages being paid to the lowest star. I feel it's, I don't know, unless they have something more on that, I am not fully aware about that. But prima facie, when I see the numbers, I find that numbers are falling below the minimum wages being told by the government, state government. So that's another thing. Employees PF, Gratuity Act, these are all areas where you need to do the, I'm sure these are all going to be discussed more, but I just noted certain things I thought I would make it. More than everything, KYC and AML. And this is something where it's a very sensitive area where RBI has been also very, very harsh on that, and that's how we have seen recently what has happened to Paytm and all. There are other set of compliances are also there. Apart from these regulatory ones, we are also required to submit data to different authorities, different organizations. Of course, first is the state and national associations like SRO, as well as associations like ACPI, Sa-Dhan and all. So, submitting the data on time. There are also requirement of submission of data to the CIC, that is your credit information companies. There we have about 4 credit information companies, so all the 4 have to be fed with the data on a regular basis. And there too, the data should be fed on a regular basis, on a quicker time. Unless it is done on a regular basis, it will not have the benefit. Then there are other requirements like submission of CRIL data, SMA2, these are all RBI related information. Even NESL, there is also, come on, just come. So there are so many such requirements. Suppose some MFI has already been gone to the IPO, there are other set of compliances from the SEBI side. So there are a lot of compliances. These are not the only list. There will be much more than this. So what I am trying to say is that we are supposed to have a full set of compliances. Then only our reputation can be strong. We can be a more healthy and a compliant institution. Here, let me also make a mention of that. When I was talking about the HR conference and where we talked about the attrition level and people leaving the organization and joining somewhere else and all. See, there is a platform with Equifax, HR platform with Equifax, where the employee data is being fed. If you can regular in feeding this data, that will be an excellent platform for understanding a person who is leaving the organization. Now what we are seeing is that people leave the organization, coolly go and join another organization, even if they have they have done something wrong, or they have not gone through the due process of exiting the organization, just go and join them. Whereas if this Equifax employment bureau is properly followed, the data, if it is properly fed, the new organization can look into that and understand what the person is, how the person is, what is his character and all. So that is it's also a compliance I would like to see. So submission of data to various authorities are definitely a requirement as far as the compliance is concerned. So I was only, let me not take more time now. I just wanted to bring to your notice that there are so many compliances. And of course I know sometimes it's cumbersome, but it is to be done. To create a good environment, good financial environment, create a good, strong institution, this is very, very important. So I am sure the people sitting here are all aware about the requirements of compliances in the MFI sector, MFI institutions. I am sure that our leaders who are here, Garadanaji or Salimatji and all the speakers, they are all going to give you much more insights about the compliance and what will happen if there is compliance. I am sure today's workshop will be a fruitful one, it will be useful to everyone, and when you leave this hall, you will be going with more enriched and more, I would say, energized to do better business in MFI sector. Before I end, let me also thank ACME for being part of this conclave. I would also like to say thanks to Navchetana, Maliji and his team. They have also supported us in organizing this program. So thank you everyone, and thank you for being here. Please make this half a day conclave a fruitful one and useful one. Thank you so much. All the best.
Mr. Hegde, and all my fellow MFI compliance officers and other executives. I congratulate Sa-Dhan as well as ACME for organizing this event, which is timely. As we speak, RBI audit on the compliance issues is going on. Our own organization is undergoing. So my own compliance officer is not here because he is attending to them. Yesterday, I think Navchetana had this audit, which goes to show the importance various regulators have attached to the compliance issues. While in the next couple of hours you will be discussing nitty-gritty issues of various issues and what to tick and all that. So for some of you it is a ticking a box. This has happened, yes it has happened, it has happened. But what is the philosophy behind compliance? Why at all compliance came? some of us were associated with microfinance since the beginning, even before microfinance started, because I used to be a banker. And we started small loans, and then when the microfinance sector commenced, I have been associated with them. At that point of time, the size of the sector was measured in 100 crores, 1000 crores. Now it is in lakh crores. It has grown big. So whenever certain group activity takes place, it undergoes several phases. First is forming, somehow we start. When you start, there is no regulation, nothing, you just begin. There is an intent, there is an objective, and in that you start going. And while doing so, there will be some hiccups, some blocks. Then starts the phase of norming. I should not have gone this way, it should not have happened. So norming, then perform. So on the journey, several things have happened, and I used to be in Sa-Dhan board, and I have been interacting with various RBI officials, government officials and all that. At that point of time, they appreciated the objective with which the microfinance started in India. They have been very supportive. And in Karnataka, we started with a small crisis. One of the employees of a microfinance was arrested. Straight away. The reason was that the microfinance are breaking the existing SCPs. So therefore, this microfinance is almost like an anti-government program. So during that time, to convince various stakeholders, we went as individuals, and RBI was quite supportive. Then they facilitated meeting with various people, and then they said, you come as a group, so that there will be a better communication among the stakeholders. That's how ACME was born. I was one of the founding members of ACME. At that point of time, what they are saying is, since you are evolving, start to have compliance within yourself. So that is what they said, the self-regulatory. You regulate yourself here. Why somebody else should come and tell you what to do and what not to do? You have your this system. Try to have an understanding of how, that is called norming. That means norms have to be followed. Rules will come later, but at least we should have norms. At that point of time in Karnataka, though they were competitors, we were all competitors, but we also collaborated. Then various issues like communication among the organization, like GC Mamanji was telling, staff attrition, people committing fraud, going and joining some organization. So we started evolving various norms. And RBI believed that you regulate yourself and you come to us with least governance issues. You should not come to us, ideally. But then it was not happening. Some black sheep were there, some violation took place. That led to heavy-handed action in Andhra, you all know about it. And recently in Assam also. So therefore, if we ourselves understand, we should understand the philosophy behind these regulatory measures. It is not merely submitting a report showing that no, I have done this, I have done this. What is the philosophy behind? Why at all it has started? That is very, very important. So therefore, lot of importance was given by Sa-Dhan and others in evolving code of conduct, especially the practices on the ground, how to deal with the customers, how to behave with them, because initially microfinance sector started by social engineers, that means NGOs. They knew what is social mobilization, they knew how to talk to people, how to take on board, and as the industry has grown, now immediately it has become an instant mix. You recruit today, tomorrow you deploy the person, you expect him to perform. So many of the philosophy of how to behave with the staff itself has not been taught to them, as a result of which we keep getting crisis after crisis. And the sector which was supposed to be a social enterprise as well as a financial enterprise has slowly moved more to financial enterprise and less of social enterprise, which is an alarming thing. As a result of which we have now seen crisis everywhere. And the customer with whom we are dealing are very sensitive part of the customer. various peoples are interested in them, especially the political parties and many groups. We have seen they create kind of a problem, and there are no legal solutions for many of these things. So we keep getting crisis after crisis. So in this context, it is very important that when you deliberate, one is rules and what is the philosophy behind the rules. And sometimes we also see when there are regulations, people, especially MFIs, find a way how to beat it, then complying with this. For example, I have seen some of these things. New regulation has come, that this income norm and all that. The purpose for which we requested compliance was something, but all of it did not achieve. We wanted a level playing field, but beyond level playing field, something else has happened. As a result of which, now in credit bureau, the dropout ratio is more, and some of them are they have found out a way how to beat it. For example, some of the small finance banks, they don't classify it as microfinance. They classify it as a priority sector, but the same set of customers. And how the income is assessed, what is the uniform yardstick, that also is issues. So there are issues, but then we have to find a way. Again, we have to approach RBI, find out what was the intended purpose for which the regulatory issues came and how in the ground it is happening. It seems RBI is also, recently some statements have been made, and then they are worried about the rate of interest. When freedom has been given, how responsibly that freedom has been used is also under the radar. So they are scrutinizing. Coming audit yesterday, they are also finding how do you apply rate of interest, whether appropriate board policies are there, what is the basis on which these board policies were formulated. So these are the issues. Naturally, they have to look at it. So the concern of NBFC was that other banks, they charge high. Because of imposition, we have been asked to charge low. So suddenly that compliance came and everybody rate of interest has gone up. Various issues on which. So when they gave a window so that there should be level playing field, all of you together, like a cartel, interest rates have increased. Of course, banks also lending at higher rate, inflation pressure is also there, it's all there. But there are also some losses during the COVID which most of the microfinance organizations have suffered, that also has to be recouped. So increasing rate of interest is not bad, but then how proportionate it is, how ethical it is, these are some of the issues behind these things. Again, customer acquisition and poaching of other areas. So therefore, in Karnataka, what we have done in ACME, every district there is a lead MFI. Under their leadership, all the MFI executives are supposed to meet, discuss, share issues. So there are also, the problem of ringleaders. These people have local intelligence as to how some of these groups, though not recorded, create problems. There are areas where certain areas can be called as black, grey and all that. These are on the local intelligence available. So this mechanism has to be used so that you do not end up with great risk. It is not merely increasing the portfolio. It is also looking at, one is the financial risk and also reputation risk. Now that very systematically Karnataka has been growing and suddenly competition is also growing, many new players have been coming. We welcome. Definitely it is not wrong because there is still a lot of scope. It can grow. Microfinance sector can grow at least 4 to 5 times more than what it is today. But then which area, unserved area, we have to be very choosy. There are tools available. We have to use those tools. So if you responsibly first regulate ourselves and then look at the external regulation, this industry can still grow big. So once again, I congratulate the organizers for having organized such an event. I am very sure that the next 2 to 3 hours are going to be useful. Many of you are very experienced veterans. You know your job, and some of the smaller organizations can get the benefit of your knowledge as to how we should look at the compliance and what are the issues behind that. So I wish this event a great success, and also thank Sri Memon and Hegde for inviting me for this event. and allowed me to speak a few words. Thank you.
For your insightful words. Now I request Mr. Dwarkana for a few words.
ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. Respected GG Memon, ED and CEO, Sa-Dhan, Mr. Salimat, MD, IFD Financial Services, Mr. Hegdeji, CEO, AKMI, respected dignitaries on the dais, eminent speakers, dear professionals, ladies and gentlemen, good morning to you all. Good morning. Mr. Hegdeji was talking about the compliance in his initial opening remarks. Sir, with your permission, I want to introduce myself. I am a Dwarkanath. I am a practicing company secretary, become graduate, LLB, company secretary, insolvency professional, social auditor. This is my background. 10 years I worked in corporates after getting qualified, and the last 21 years I am into practice as a practicing company secretary. I am thankful for the invite to address this August gathering. I have prepared a small note which I read out for the information of everybody, and thereafter I'll be like a freelancer, I'll be talking whatever I understand. I express my heartfelt appreciation to Sa-Dhan, which is the first and the largest association of community development finance institutions in India, for supporting and strengthening the agenda for fostering inclusive impact finance in India. It is worth mentioning that Sa-Dhan has created a better understanding of the microfinance sector among policymakers, funders, bankers, governments, researchers and practitioners. Friends, the theme for the conclave is of immense relevance in today's context, especially in the aftermath of the pandemic that has impacted every aspect of our lives. I quote Kofi Annan, "Sustainable access to microfinance helps alleviate poverty by generating income, creating jobs, allowing children to go to school, enabling families to obtain health care, and empowering people to make the choice that best serves their needs." Unquote. The microfinance sector plays an important role in promoting inclusive growth by providing credit to borrowers at the bottom of the economic pyramid. This sector has been instrumental in creating opportunities for low-income households by providing credit access to borrowers who are previously beyond the reach of the traditional financial services. Microfinance contributes about, to my knowledge, 130 lakh jobs and 2% of the GVA, that is gross value added, according to the National Council of Applied Economic Research study. Government initiatives play a significant role in channelizing the credit flow to underserved sectors through priority sector lending, micro units development and refinance agency limited, Mudra Yojana, loan, co-origination and private sector investments. To supplement these initiatives, steps are being taken to empower women by providing them easy access to credit, assistance in starting their own business and financial literacy programs. Schemes like Pradhan Mantri Mahila Shakti Kendra are creating a conducive environment for women to realize their full potential. When we talk about microfinance, then we must acknowledge that women in microfinance are at the core of its delivery model. Microfinance services are primarily extended to women through JLG, that is a joint liability group. And in doing so, not only does the industry position her center stage in her household, but empowers her to run it. Microfinance appears to have enabled women to have collective bargaining mechanism at local level, facilitated them to move out of their household and build a relationship with various stakeholders. Regarding compliance with the regulations is critical for MFIS due to their ethical commitment and humanitarian responsibility. Ensuring compliance requires establishing a robust non-compliance risk management system and regulatory monitoring with the MFI. This includes adopting various policies, codes of conduct and risk mapping, as well as providing training and guidance to staff regarding regulatory compliances. Having said that, let me come to the practical issues regarding the compliance officers enclave. If you look at the meaning of the enclave, it is actually an assembly or gathering, especially one that has special authority, power or influence for discussing and deciding on a specific matter. I think that's what Mr. Hegdeji was referring to. This kind of gathering will certainly make you to understand what the issues are being faced by the stakeholders, particularly MFIs in this case. And those issues have to be brought to the notice of the regulators so that wherever it is possible that would be addressed in the interest of all the stakeholders. As far as the company secretaries are concerned, let me take an example of Companies Act itself. If you look at section 205 of the Companies Act, which specifically says what is the function of a company secretary. Here I have to give a small background that the companies which have got a paid up capital of 10 crores and above, paid up capital, I repeat, such companies are required to have full-time in-house company secretary to support the board of directors. Having said that, and having a full-time company secretary as per the statutory requirement, the company secretary over there function is to report to the board of directors about the compliance of the Companies Act plus all other applicable laws. It is not only Companies Act. Please keep in mind, it is beyond that, all applicable laws. That is the kind of responsibility that has been reposed on the company secretaries. Reason being, we are fully equipped to handhold the board of directors to comply with the requirements under various laws, because we also undergo regular capacity building programs. We also attend the webinars as and when there is a change in the regulations, rules. We do conduct many programs to apprise and make corporate friendly executives, that is company secretaries, to know what is the current position. As far as there is another part which is called practicing company secretaries. So one is full-time employment, the other one is practicing company secretaries. Practicing company secretaries, there can be consultant freelancers There are companies, though they have got in-house companies, still they take the services of an experienced person who has got grey hair like me. So point here is, rightly I think Mr. I just DG Menon was talking about the complaints. Let me tell you, see, I was just a fresh company secretary, went for employment as a company secretary first time. So by the time I joined, that company had gone for an IPO. They were also planning for a rights issue. When AGM was scheduled, we were supposed to print the annual reports at that time. We had approximately around 32,000 shareholders. Due respect to that managing director, that lady, they were from UP. When I put the proposal, sir, madam, this is the requirement under the Companies Act, we have to comply, because we are talking about compliance. She was trying to understand how many copies. I said 32,000 plus another 1,000 for future reference. Aapko dimag kharab hua kya bol? She is trying to say that. Why? The cost involved for printing was huge in her thinking. Went for public, right? When you have mobilized the public money, as has been mentioned by one of the speakers, so you have the responsibility for having done certain act, like mobilizing the funds. Then I was jittery, what to do. But luckily I had a senior company secretary at that time. I narrated that this is what has happened. He said, you please keep quiet, I will come and address this issue. Okay, that issue has been solved. Point here is, if you are not giving the annual report to the shareholders, certainly would have been in problem. She says you print only 100. So this is not. I will come to the other points. Important of the complaints. I was a consultant for a company for nearly 12 years from the inception. So they wanted to go for an IPO, went for an IPO, everything mobilized. Company was doing extremely well. In one occasion, the board decided to declare the dividend. I said, when the meeting took place, look at the financials, not that I am not against declaring dividend, but look at the future business plans, whether you want to plow back the funds for future requirements. No sir, now I want to declare dividend so that everybody will appreciate, then I want to go for rights issue. This is how they have planned. I still said, okay, have a look at the entire financials, have a meeting with the board of directors once again. I was the secretarial auditor. He said, no, we want to declare dividend. They declared dividend in the AGM. But though declared dividend, they have not paid the dividend at all for next 1 year. So again my role came as a secretarial auditor. I had some observations. One of the major observations was that I have to mention that the company has declared dividend but has not paid. Next day I was removed as secretarial auditor. The point here is, okay, now the company is no more. That is a different issue. You had to respect the law. You had to comply with the law. See, it actually, people think that certain departments, accounts and the secretarial department, they say only there is no actual productive contribution. I don't agree with that. Let me tell you. See, we as a governance professionals, we have gone beyond compliance. Now we are called as governance professionals, a different role altogether. We give the value addition for the corporates in whatever fashion. People recognize today Infosys, Wipro, so many companies are there. If you say yes, because they go by the policy, self-regulation. So again, one of the speakers was talking about self-regulation. Yes, government has liberalized everything. Please, you handle on your own based on the rules and regulations. And at the same time, if you are not complying, you are subject to penalties. As simple as, okay, let us not talk about at least imprisonment. Severe penalties are going to be levied. Coming to the compliance part, yes, I wish to say that please remember the cost of compliance is much less than cost of non-compliance. This is a statement I can make. Because sleepless nights will be there. I always say to my clients, you try to bend the law. Do not break the law. If you are breaking, you have to face the consequences. At least you bend the law, you can put forth your views. This is my understanding, that is why I have done like this. So don't break the law, bend the law wherever it is possible. Last, these associations have come together. A quote I wish to just say, coming together is a beginning. Keeping together is a progress. Working together is success. I wish that today's deliberations, discussions and thought process which is going to go on will give deeper insights and importance of complying with either it's Companies Act or RBI regulations or whatever law that is applicable, so that you are equipped to ensure compliance from time to time and see that you pay only the filing fees, not additional fees. Thank you very much.
Now I will request Mr. G.J. Memon to give a small token of thanks to our eminent speakers. RBI has given a lot of compliance-related notifications. One of them is careless regulation. Also, they have revised the microfinance regulation, as well as they have also come up with a regulation for fintechs. Given that, RBI have also mentioned that the role of chief compliance officers in microfinances. It has been defined and given a guideline from RBI. On that, we want to discuss today what could be the role of chief compliance officers given the emerging scenario of the sector and evolving nature of the regulations. I invite Mr. Harish Raghu, ED and CEO of Sangraha. Please come on the dais. Ms. Savitri, Deputy CCO of Ujjivan Swanhine Bank. Mr. Ramesh Periyaswamy, CCO, Spandana Spurti. Ms. Rajlakshmi, CCO, Dwara, KGFS. Mr. Kapil Kumar Ruhela, CCO, Midland Microfin. Mr. Vikas Gupta, CCO, Satin Credit Care Network.
Timely event, much needed at the time. Let me start with a quote which is doing rounds in the last few days. I quote, even if you own a Ferrari, you need to follow traffic red lights. I quote. Right. So, starting from there, the we have seen the microfinance industry growing from nowhere to here. For me personally, I've been associated with microfinance from 2005 as a lender for the largest private bank. And Karnataka, I was a regional head in 2005-06 there. We used to give 50 lakh, 1 crore rupees at the time. I remember doing a deal with Mali sir with first 1 crore deal from ICICI. and of course now it moved leaps and bounces. But having said that, this roadmap also, as mentioned by Salimat sir, that we also encountered so many problems to grow that because I always mention Salimat sir as a social conscious speaker of this sector for many days, for many years to go. Because this is the fundamental point we always talk about microfinance, because there is always a trade-off between the social consciousness and the economic consciousness of our business. But having said that, today we touched more than 7 crore families across the country, and of course we are still growing, still counting, still there are a lot of work to do, and of course at the same time we need to comply, we need to self-regulate, we need to have our own discipline, because whenever we call of environment of compliance, we live in regulatory environment. It is not a March 31st kind of stuff or every quarter end stuff, but it is a day-to-day affair for us where we live every day in regulatory environment. When you talk about regulations, yes, there are must-to-have regulations where we have to follow, come what may. And there are also, we talk about the good-to-have points in our own organizations. It is, limited to what each organization wants to follow. But we all know how the organizations have grown up, how the organizations have shown the leadership in governance, and all these things. So today my job become very easy thanks to the team Sa-Dhan for selecting eminent speakers with me. And before I start, I will also talk about certain things today, what we are going to set up this panel. One is about the changing landscape and the evolution of regulation, because it's dynamic. We are seeing previously at the time we get a circular from any regulator, it's like a unknown thing which it comes and then you have to follow. But today there is a consultative process by various regulators and the democratic process. First a draft being made, which is put on the public space, then the feedback and the clarifications have been sought from the public and organizations, which after brainstorming of all these factors, then the final guidelines are being released. So there is a consultative process, there is a changing evolution in many ways. We also hear from our speakers on the how, just not on RBI, because when you talk about compliance, because my next panel is going to talk more about RBI compliance, so our panel will be focusing a little bit on the RBI compliance, because if you see the compliances, as many speakers mentioned, including the senior speaker, sir, as mentioned, it is just not, the compliance is just not about a company secretary to do or handle, but it is every employee in NBFC or a banking space to handle. That's what we taught when we joined the bank. Because unless until it is not a compliance. Because the problem with compliance is, it is not like a speedometer where you have 1 to 100 in every meter. In compliance meter, it is 0 and 100. There is no 99. Even if you are say 99% compliant, you are a 0% compliant. So that's the setup. So we start with some discussions here. I'll request Rajalakshmi Madam to start we will have the first discussion point in 2 parts. First, non-RBI regulators like SEBI. What we do is a listed company, or even if you are an unlisted company, also when you do MCDs and all other, there is a scope. And of course, the restarted companies, we can talk based together on the ROC, the direct tax compliances, the indirect tax compliances, employment law compliances, there is state government like the shops and establishment, all these things. How do you look at the evolution of these various compliances and some of the important factors where our young compliance officers sitting over here can get benefit from?
Rightly said. I think the number of complaints, the number of circulars and the number of complaints has increased manifold over the last few years. And the other thing is, past there were a lot of differences, like if I'm a listed entity, then I have my own list of complaints. If I'm unlisted entity, comparatively my complaints requirements is very less. But over the past few years, we have always seen a harmonization approach. So the moment I touch, the moment I raise public funds, I have to be compliant 100%. So because of that, the scale doesn't matter. So the moment you decide that you will be into this financing business, or the moment you decide you will be you float a company, you have to be compliant, and it is 100% compliant. And the second thing is the overlapping of the regulations. For example, be it the SBR or your data privacy or the RBI compliances, these all talk about the fundamental is that it's about the disclosures, the transparency and transparent disclosures to your stakeholders, so that everybody knows the current state of affairs of your company. So there are a lot of overlapping, and customizing it and adapting it to my business, my company is something which as a compliance officers we all have to think about, and that will only help in implementation, because the same sites doesn't fit for all, but the penalties and the requirements fits across board. And the second and the last thing is on the detailing. So for example, in SBR previously, before SBR it used to be that the audit committee or the NRC should have a minimum number of independent directors. But if you see in SBR, it's very detailed saying if it's going to be an NBFC, you should have a board of director who has a minimum number of experience in the particular sector. Similarly, for a chief compliance officer, the days are gone when they say that it should be a company secretary. Now they get into more of a detailing. Your company secretary should have these kind of, professional qualification, should be competent enough, and also when there are inspections, they make it a point to assess this and also comment on the team structure and the competence of the governance professionals. So I think these are the few points in which it has emerged, and also the increased focus on the assurance function, be it compliance, secretarial, or risk management, or internal audit. So over the last 3 years, I think the increased focus and ensure that whatever has to be done is done in a way which it should be done. Thank you.
Thank you, ma'am. Thank you. Good insights. Now, because you are handling a listed entity rather, so your perspectives are going to be very important for us. And if you can throw light on these various compliances other than RBI, how do you proceeding them for the future, and how the action plan from your side?
To just share my thoughts too with all the dignitaries over here. So tone has already been set up by the Dwarka sir, Sharma sir, and Gigi sir at the beginning of the the inaugural speech. So if I'm talking about the compliance perspective, so compliance perspective, if you just see the kind of the evaluation into the last decade, once the Companies Act came, before the Companies Act, there was only the provisions were there, listing agreement were there. But after the implementation of the Companies Act, then thereafter the new LODR regulations came. Then after the master directions came, because the consolidation of all the RBI circulars were there. So consolidation of all the RBI circulars in 2016, master directions came into the picture. Then after the gap of the COVID were there, so into the COVID period, the RBI had issued many circulars, SEBI had issued many circulars over that. Then after this COVID period is over, the SBR came into the picture. So if you see the evaluation of the last decade, so there is the compliance word is coming into the highest level. So all the famous quote has already been quoted by all the three the gentlemen, all the veterans, So which I read first quote into the one of sorry, I had a pen. So one of the quote which I read into my early stages: if you can't do the compliance, try non-compliance. So that thought, that quote which into the government authority, after that that period of the the implementation of the Companies Act, I would say the Companies Act was the first step by the government into this corporate culture, and the follows by the other regulatory authorities. So it would be the role of the company secretaries for compliance of the Companies Act, the listing regulations, and then now company secretaries coming into the picture of the CCOs as well. because the compliance word is already into the company secretary's blood. So the compliance is coming, and now being a CCO of also the Satin Credit Care, I got the opportunity to into the coming into the picture of this the compliance function and giving the best to my organization in respect of the the what you call that the best not to the best compliance, but yes, at least try my best to the compliant everywhere.
Because Torikna sir, you can correct me if you can, because till 2013 the new Companies Act came in. Previously we used to follow 1956 Act. Till that time, for I was senior management in various companies. That till that time our perception was that company secretary means who can attend the board meeting, who can conduct the meeting and just prepare the minutes, and that's it. But post 2013 today, as an entrepreneur, I depend on my company secretaries a lot. All my agreements, all my documents, all my letters, the words, what we speak and what we present to our board, what to present to our lenders, investors, what not. I think even for our employees also, as a promoter, the compliance starts with your own employees, the what do you call, the inner customers first, then outer customers. So probably I think you put it very right, Vikasji, thank you for that. And now I go to Rameshji, who is handling the compliance function for one of the oldest microfinance institute, Spandana, which I was also part of that organization in 2010. Rameshji.
So here, so I think everybody, majority of people have covered on the compliance side. So here I just like to share some of the thoughts and the practical aspects. So we are, as a compliance, we are thinking about SBR, SEBI, RBI, only that. When it comes to a business, particularly MFI business, when we do a business majorly on the rural or type 3, type 2 cities. So we start, if we don't do a kind of a business or a branch open like a banks or the SFPs or in a full-fledged way, maybe mostly a residential kind of places, where we always give a less important to the local level branches, which starts with a small electricity act. So there is a compliance under the electricity act. When you take up even a residential branch, that has to be converted into a commercial, and then only you can start the branches. So electricity act itself makes those employees, without converting that into a commercial meter, if we are running the business in that. So that makes even electricity board to arrest the people who occupy it. So that is again another bigger level of compliance, though it does not comes under the main point of view, because we are all into the major aspects. And apart from that, shops and establishments, so that is another important one. And the displays, branch displays, which is majorly why we need to do a display. So who comes? So particularly when it comes to a microfinance aspects, the walking customers or walking borrowers is comparatively less. But still, even if they come for once a time for at the time of sanctioning the loan, so they should see it. So and also to managing the compliance register. So these are all the basic things which we need to educate the customers, and code of conduct is very important at the time. Now even in RBI officials also very much importance is being given with respect to how we are monitoring or how we are, what all steps which we have taken with respect to implementing this COCA, code of conduct assessment, which is SROs has been issued. So that is one more aspect, and whenever we open the branches and even informing I think the majority of even what I have seen, sometimes we may miss even informing local police. So when it comes some frauds or robbery happens, even police officials will not even know that we are running the branches. So these are all small aspects from the compliance CCO's perspective. So it has to be internally to be governed in a proper way and has to be monitored, and the cap has to be assessed, and this has to be advised to the operations team to execute it. And also we should also help internal audit team to review it, because as a compliance people will be in the head office, but we may not able to move around across the branches and check all these compliance at the field level. But we can able to take the help of internal auditors. And then apart from that, I think many people would have been knowing GST. GST is one of the other important, where we do a credit shield insurance, and many issues have been arised on that with respect to the service or marketing expenditure which has been raised. So that in that perspective also, so the what do you call? So now people are moving on to the IRDA requirements or IRDA governed process, not on the other way around. So but many people already earlier, which they knew this nuances of this compliance requirements under the GST Act. So they have already earlier itself they were doing it through proper IRDA requirements. So that is another important aspect which from the GST perspective, which we need to look into it. So from the being a listed company, so many people have said, so company secretary and CCO. So for me, for a listed company, company secretary job is a full-time job. For a CCO, of a sizable an NBFC, microfinance or any other NBFC is twice a full-time job. So that is because CCOs are the persons who has to interact across the functions, then take up that to the senior management and to the board. So it has multi-layer functions over there, even for sending an SMS from the contributing from the simple sending a language of the SMS to reporting to what kind of things which goes out from the company, whether it can be a SRO, it can be a lenders, or it can be a regulators. So the regulators' expectation also. So for example, we were having a company secretary, we were having principal officer under PMLA and KYC directions. But why this now RBI is coming up on a CCO? So after CRO, then now it is a requirement of a CCO, specifically for a NBFC. So now SFBs are already having it. So now they have now matured enough now understanding the entire compliance process being set up, and they have graduated actually. So banks, though it is long back it is there, but now even for a middle size, even 1,000 crore NBFCs also has to have a setup, because what my understanding is. Earlier, the concept or thought process was only a deposit taking or public money which has been taken or acceptance. Only banks, which if something goes wrong to the banks, it may impact the economy. But it's not like that. Even the company which is more than 1,000 crore, now the NBFCs are having a even bigger in size. So if something goes wrong to that particular NBFC, that create a bigger impact. Even the banks which is in a smaller size to the economy. And we are direct, like an employees is a direct affectees and then indirect affectees. So that create a bigger economic process itself. So that may be one of the reason for having a specific CCO function, and also putting it on conflict of interest, dual acting requirements and everything. And so for example, CRO we have, CISO we have, and internal audit HIA we have, and CCO also. So it is like a...
Sorry to hold, Rakesh. I think we will discuss this part on if you can take a minute and just throw your light.
About the other regulations, so I would start with the RBI regulations. So in the recent time...
I will start on the non-RBI.
Okay. So like recently the regulators has come up with the DPDPI, which has given importance of like storing of personal data of the personals, which has not been notified till now, but the regulators expect that all the entities should be ready with those infrastructures and the facilities within the organizations, so that when the notification would come, the people are ready with those changes and can adapt to those regulatory changes as early as possible in a timely manner. And apart from that, there are several compliances in terms of environmental laws. So if you have seen in the in the smaller size NBFCs also, when they are putting for the proposal for the investors with respect to any investments, they see certain kind of impact assessment from their ground level lending portfolio, that how they are impacting their lives in terms of sustainability and environmental friendly. So they consider all of these parameters when they are considering investments. So these are the major changes that I just would like to add on this session.
Thanks, Kapilji. I think the being compliant also helpful for you to raise equity very easily, and of course you can raise debt as well. I think that's a wonderful point. And Ramesh sir's point, the GST laws are very new for us for last few years, last 2 to 3 years. It is still evolving. Try to understand the importance of GST laws now. How do you raise the online invoices? How the deemed to be clauses in GST are impacting our invoicing and various, of course, the quarterly or monthly the reports you have to submit and file online, all these things, I think they're wonderful to understand. While we are discussing, Savitri ma'am was still thinking that these guys are still touching the pan and feeling the heat. I'm handling the fire directly, being in the SFB. So, Savitri ma'am, if you can start, your views on the how you are handling the RBI circulars for an SFB particularly, and how, because we discussed about non-RBI functions and compliances right now. On the RBI side, if you can throw some light from your side.
Sure, thank you, Harish. Thank you to be part of this quorum and forum. Thanks to Sa-Dhan and Acme for this initiative. It's indeed very relevant for, and it's a very happening topic today. The need for having a compliance officer and the emerging landscape that we are talking about. To put this more in perspective, and all the eminent speakers who spoke about touched upon various aspects of compliance. If I can take a step back, I think it's important for us to come a little from the Ghosh Committee recommendations. The then banking setup that we had, to see that compliance was more looked upon like an audit and inspection kind of a setup where adherence to these compliances were more surfacing through the audit reports and more through the inspection mechanism of the banks. We slowly evolved and I think over the last 1.5 decades, I can see that there's been a great evolution in terms of what is compliance. And if I can, the way I see it is, it was more in letters then and it's more in spirit today. This is not just with the regulating entities, it is also felt in the supervision mechanisms. It's definitely intensified, and I can see that a lot of re-engineering has happened even at the supervisory level in RBI. Whereas Ma'am Rajalakshmi rightly pointed out, a lot of harmonization has happened at their end. They are also not looking at it from an entity perspective. They are looking at it more from an activity perspective. The classic example is the MFI regulation which has come up, which is agnostic of the entity that it pertains to. And it applies to any entity handling that kind of an activity. Let it be the digital lending initiatives, the digital banking units, the strengthening of the internal ombudsman, the outsourcing kind of regulations that have evolved, are all activity specific. To answer the specific question of Mr. Harish, what is the heat that is being felt? I can call them helicopter supervisors today. To give a perspective, to cut the long story short, in the last 12 months, at least for about 9.5 months, RBI was in the premises of the bank, closely monitoring, either doing a process audit or doing an inspection or calling for data or landing up one fine day to say the next 2 days we're going to spend here. So that's the intent that is being felt.
Everyone, I think, rightly put. Yeah, because now when it comes to RBI regulation, very specific to the MFI sector, what we are speaking about, the two regulations, because I was going through the list for our own group companies. We have 3 NBFCs and SA. We printed 85 guidelines of RBI, but probably the experts can add more. But I have printed 85 guidelines which are applicable to us, and we have to follow at least part of them or in full of them. Having said that, the two guidelines which are very apt for us, Kapil, is one is the scale-based regulation, and of course the, as mentioned by Savitri ma'am, the unified guidelines of MFI, which I think Sa-Dhan and MFIN work very closely with RBI to bring in, so that the harmony is maintained among all types of lenders, and the customer is taken care in many respects. So from the Malegaon country, because I was at the epicenter of Hyderabad in AP crisis days, we used to handle politicians, government, police, media, and who not. So I know the pain of that, how to handle that. But after Malayam Committee, the separate creation of the NBFC MFI as a specific set, and of course now the unified guidelines, there is a long way we travel. So Kapil, your thoughts on the RBI regulations specific to these two circulars?
Earlier, but now after coming up with this scale-based regulations, RBI has curtailed down this number of regulations, and they have shortened this number of regulations by coming up with this new regulations. So they have consolidated most of these circulars through this scale-based regulation, and which mandates and also diminished the values of they have come up with a scale base where the base layer and the middle layer NBFCs have been defined. So earlier, like in the previous the regulations, the NBFCs which are having asset size of 500 crores and above has to comply with the separate regulations. Now even those have also come up in the base layers, so they have to comply with the lesser regulations. They are not very vigilant for these kind of regulations. They have come up with the middle layer NBFCs, and they are more focused toward these industries. So when we are in a middle layer NBFCs, we have to comply with certain regulations which were earlier applicable to the systematically important NBFCs. So with these regulations, there are various changes like mandatory directors to be there from the which are having NBFCs experience for this particular corporations to be present there, and they have come up with the MFI directions which require the income and assessment criteria. The facilities to determine the interest rate has been handed over to the organizations, and organizations they have come up with a household income assessment metrics. Accordingly, the income assessment for the families of the members of the MFI industries has to be evaluated. But they have not come up with the exact criteria on how this income has to be assessed by these entities, and all entities are having their different structures. They are not following the uniform structures in evaluating their incomes, and basis on their individual judgment they used to determine their income, and accordingly they are sanctioning loans. So even in most of the NBFCs we have seen that they are having in different structures, they are recording the different incomes, and basis on that they are lending those. So like earlier NBFCs used to follow certain guidelines, like if 3 lenders has lended given loans to the MFI members, but the 4th member will not lend. But now these structures have been changed, so they are evaluating all of these things basis on this income assessment criteria, and with these changes, so I think the regulations should come up with certain guidelines on the income and expenses criteria, where the specific structures in this unorganized sector can be uniformized across all the industries. So these changes are give us a call that we should be building structure within organizations which should be evaluated on a very periodically basis, and RBI teams in a recent inspections we have also evaluated, they expect all of the industries to evaluate this household income assessment metrics. Like they have come up with the credit underwriting framework guidelines. They have given up emails to all of the MFIs in a recent time. So they expect NBFCs to be more proactive and adaptive to these changes in a letter and spread.
Because I was part of a recent discussion with the Deputy Governor Ravi Shankar when RBI Innovation Hub, which is next to our office in Bangalore, conducted an interaction with fintechs, where a lot of fintechs were invited, including some SFBs and PCs. The first time ever I felt that RBI is so open to talk at Deputy Governor level, personality speaking about how the thought process about fintechs, what are the problems as a systemic risk, somebody said, and how do we, why they came up with the digital lending guidelines, what is the implication of that, how the future looks like that. Because as you said, the regulator is also changing and evolving for a period of time to the need of markets. Because it's just not giving a guideline, but there should be a basis for a guideline, and there should be a philosophy and thought process behind those guidelines. So probably you rightly said that these changing guidelines are really helpful for the industry, and we maintain the sanctity of our structure of a business, basically to reach out the unreached families across the country, and we reached 7.5 crores and we are still counting. Now I request Rajlakshmi Madam to add a few points on this aspect.
So I think the regulation on the household income, if you look back when it came, it served as a benchmark, to how to assess the household income of the households. But as he rightly pointed out, although it defined the framework, it also left the specifics to the individual MFIs. But I think the base criteria is that you classify based on the income limit, which is 3 lakhs. So how to assess the 3 lakhs is something, it's not unified across the industry. For example, at Dwara KGFS, we do it income of the earning member, his spouse, and the unmarried children. So this is how we do it. But of course, when we rightly speak, we had an RBI audit specific to that, the calculations we do, how do we classify, all those things. And they had a few comments also which they felt, and we felt that, there is that interpretation issues with it. So so as he rightly pointed out, I think the need is for the regulator to come up more FAQs, be more specific as to what is the criteria in which you should actually derive as the household income. And on the SBR, as he rightly pointed out, it's not that we have not been doing or whatever has been listed out in the SBR. Only thing is it was in the form of various circulars which has been consolidated and given as a one consolidated master direction which you have to follow. But I think the major change which I see in comparison to SBR is the transition period. So if I'm a base layer, I have my own set of regulations to follow. But the moment I touch 1,000 crores, I automatically get shifted to the middle layer. But but the transition time is not this. The moment I touch 1,000 crores, I have to be compliant. So when I do my business plans or when I do my compliance requirements, the business plan has to also include the compliance requirements. I need to, prepare it right from day one that if I touch 1,000 crores, my compliance has to be like that. So be it the appointment of a CCO or the recent one being implementing the core financial services software, and these are all not things which you can do it in a very short period of time. You have to set it up, test it. I think so. This is the increased compliance requirements which has been which the regulator has from this entities.
Time. So I have in the new MFI regulatory framework. So as an industry, there are 2-3 points. Which one of the point is capturing the exercise and also the expenditure, because it's left out to the companies in the direction. So even different people are adopting different aspects, but that will not even come to the expectations from the RBI. In addition to that, there are 2 more requirements, which is like earlier we were having 1,75,000 as a household income. When it moved to a 3 lakh, suddenly everybody become 3 lakh. Now it is going to a 5 lakh. Now tomorrow itself everybody become 5 lakh income. So that is and there is a requirement that is called for specifically when assessed income has been, which is reported. Earlier it is 1,75,200, and the company which is first going and saying that they become 3 lakh. So there should be reasons to be captured, but nobody is capturing. So RBI is a little relaxed to that. So once they start digging into that and start checking what kind of reasons you have to inform to the CICs while capturing 1,75,000 to 50% and hike in their household income. Likewise, maybe once we increase this 3 lakh to 5 lakh, this will be a stringent. So this methodology also has to be adopted. And for example, even in the practical cases, MFI reports their income or borrower's income as less than 3 lakh. Then if banks or the SFBs or anybody gives other loans other than MFI loans, they increase their income suddenly to 5 lakhs, 6 lakhs. So these are all the issues practically which has to be addressed and industry wide, and there is a uniformity has to come with particularly in this aspect. Then the third one is now there is a requirement for when we assess or determine the compensation for our employees. So earlier there was not such a requirement. So fair practice code, how our customers behaves towards the customers, so our staffs. So that while we determining or fixing the incentive or the fixed salary, so we have to take into consideration code of conduct is one of the key aspects. So actually that is still open for discussion. I don't think that anybody have started doing it. and that is again has to be evolved under some sort of maybe SROs can help. What kind of criteria when we do a performance appraisal process to the field level employees, but I don't think that any MFI does the field level employees performance appraisal, but that has to come. That is one of the requirement. And apart from that, there is one is the customer related behavior. Then the second one is the quick mortality. So that is again another very important aspect which regulator is looking into it. So quick mortality again, as per RBI definition, if you see 12 months is the quick mortality time. But for our case, particularly MFI business, it may be, we may have a 12 months loans, 18 months loans, 24 max to max, we may have a 24 months loan. So even we were caught, and in our case, what we have done is we have internally come up with a policy on quick mortality. We said it's a 6 months for us. So we will see 6 months is a quick mortality according to us, and we have even trying to convince and communicate to the regulator as well, because that's the right way to measure it. Otherwise, if it is 12 months, my 24 months is my average maturity is 16 to 17 months. So if 12 months if somebody is closes, everything will become a quick mortality only. Nothing is going to mature in a normal scenario. So this is some accountability towards these quick mortality cases, and there are cases non-starters. So how are we measuring into it? How are we taking into it? At the same time to address the attrition. So it is like it's a mix of each other, and the thought process across the industry has to be thought through. Some common procedures or the guidelines has to come across, not from the regulator, within ourselves. So how are we going to manage these three unaddressed areas? So which is very important. HSI, so everybody having, but the expectations from the regulator is not being met. That is the reality, because we say we will take an undertaking. So there is no what do you call? They have written some bank account statement. Where is the bank account statement? There is no bank account statement for the people. So likewise, so HSI and expenditure, capturing one is the income, then capturing expenditure. So in the initial stage when we launched this MFI framework, unfortunately when we also like that 3 lakh only from 1.75 to straight away 3 lakh. So of 3 lakh, 2 lakh is expenditure. But still we can able to give 50%. So FOIA issues. So likewise, these are all getting it matured. I think it is the right time, and particularly that may be another reason for the CCO to be there to get this done. So it's a main point for the CCOs to look into it. And this year we have to do a compliance risk assessment and reporting on that. So I think this is all important area for CCOs to do a testing.
Right.
Thank you.
Okay. So it's always like this, the letter and the spirit of the law or the regulation is very important to understand, because it's on a writer note, it's always said that how do you read the lines and how do you read between the lines. So there are some grey areas. The strict compliance officer can say that grey area is a white or black, right? You have tendency. How do you define the grey area? Because it is same a 2-line guideline can be read and perceived by different individuals, even they are professionals. But the right way of inferring any guideline or a law is very most important for all. I believe the SROs like Sa-Dhan are doing a wonderful job in clarifying these things to the members and the participants very nicely. Lastly, 1 minute for Vikas Ji on this point, in the interest of time.
No, just read look at the regulations there in a true spirit. Whatever the intentions, coming back for the regulators to come with the regulations. They are just observing the kind of the activities going on into the market. So to curb all those activities, the regulators are coming with the new regulations, right? And so the professional's duty is to just not to defeat that purpose. You can just see the obviously you have to just find out the solution for the management. But you have ultimately as a professional, you don't have to just defeat the purpose, and you have to find out the solution between the lines for the management as well as, so that we can just the complied as well, and the purpose of the management is also being preserved.
Panel discussion. So when you look at the evolution of the organization structure, the olden days only the one boss and the rest of the people are like stand down. But later on the various structures and organization structure have become more imperative with the evolving mindset of employees and evolving technologies, evolving functions within the organization. So obviously when initially the CEO was the boss and everything, now suddenly there was the CFO has come into the picture, that who is really the one who can define your boundaries in many ways. There was times when the chief human resource officer is the important one. Without his or her the acceptance, you cannot go ahead and expand your business. And all these days, because the original important people used to be chief business officer, we used to say that call the shots and do that. And now, evolving into that, there is a new structure called CCO. It is initially, people thought that it was a company secretary, but much beyond. The increased importance for the CCO designation itself in various organizations, and that CCO have to work in tandem with various CXOs. We will talk about the governance factor and the implementation factor in the next discussion. But on the first point of my request, Savitri ma'am, if you can throw light on how the CCO role is being embraced by the new structures within the organization, and how whether we are getting the pool of talent to recruit into this department is available, or how it is challenging as on date, if you can throw light.
Yes, I think the role of a CCO is becoming very critical in the era, in the evolving era that we are in, be it digitization or greater customer convenience or more real-time settlements, and in the increasing volume era. From the perspective of the regulator, they see compliance function in banks as an extended arm of the regulator within the organization. It is a so to speak, an implanted position. A very difficult one. While they have qualified, they have given a lot of attributes to the CCO, and particularly spoken of conflict of interest. In a lighter vein, it's as such a conflicting role because you are a part of the senior management. You are, constantly interacting with the top management of the bank, and you have to carry the not so great news to your board of directors. And at the same time, you have to constantly interact with the regulator. And there are points where, if at all there are breaches that are internally identified, the transparency that needs to be maintained with the regulator, we have to be very forthcoming. While we, as rightly pointed out, with an advisory cell within the compliance and with the support of peer banks and SROs like Sa-Dhan and IBA, there's a lot of constructive and reinforced clarifications that we take back to the regulator. And today I think the response from the regulator is also fairly forthcoming. As rightly mentioned, there's a lot of open discussions that you can have with them. You can even quote case-specific challenges that you have, interact with them and possibly involve them in the solution. While they may not come back to you in writing, there's a lot of advice that also comes from them offline. In that scenario, the role of a CCO, where he also has to hold both ends of the boat, together, is extremely important and critical here, and that defines the importance of that role. And how do we, interact further with the? The erstwhile. When I use erstwhile, it's not from the. It's from a very positive perspective. That earlier compliances, statutory compliances, were more segregated. Even today in banks, it's highly segregated, but they brought a little overarching, responsibilities with that of the CCO, while certain compliances are managed in certain areas like the labour laws, the taxation, the SEBI and the IRDA, and any of the parabanking activities that we do. The overarching responsibility sits with the CCO. Challenges there in terms of finding resources and expertise, and in the evolving era that we are in, it's not the age-old banking or the standard asset liability business that we do. Look at digital payments, it itself is a subject in itself that we need to understand. The multiple players, the role of fintechs, and the need to, technologically equip yourself, and, I think it's definitely the order of the day. Gone are the days, maybe RBI had reduced the age of the compliance officer to 55. Maybe with the perspective of, I don't want the person who's on the last 2 years of their way out to handle compliances for the bank. Today, I think the need to have younger people, people with more expertise and more technical understanding to be a part of it, because I think we slowly come to it. They want us to leverage on technology as well, so it's very pertinent at this point.
It's very important into the profession of the CCO. So although SBR has come into the existence, but around the SBR, the following circulars are also coming out. Maybe it is of the whole 6-7 pages of the compliance function circular. Now the recently in the November month, RBI has come out with the IT governance circular. Because with IT governance circular also, there is lot of things to be implemented into the organization. Be it kind of the appointment of the CISO, which is again a gray area for the smaller size of companies, right? Again, you have to be strengthen the IT strategy committee, right? You have to constitute the IT steering committee, IT security committee. So ultimately, you are doing the IT function as a whole into the organization. But they have segregated all the IT steering, IT security, because they are focusing on the cyber security incidents. What is because security is important. That is linked with the DPDP Act as well. Because the ultimate protection is the data protection, and with the stoppage of that data security incidents, the ultimately comes to the DPDP and the compliance of the DPDP Act as well. So they all are interlinked. They all are in fact in the compliance functions. If you are talking about the CCO role and the company secretary role, which Dwarka said and just highlighted about this section 205 as well, because it says the company secretary is required to just comply all the applicable laws. Again, CCO is required to comply each and every compliance of the organization. So they are all interlinked, and we have to just see the overall compliance function to be effective into the organization.
Thanks, Vikaji. I request Kapilji to consideration in your organization, and how do you see this industry have to embrace this the CXO level and to nurture this kind of a talent is very important for the future of the organizations.
CCO function should be given an independence to evaluate each and every compliances within the organizations, and they should be equipped with the adequate staffing within the organizations who can coordinate with the other team members to have this compliance testing, monitoring to be done on a timely based manner, and to ensure the policies which are in place within the organizations have been complied within a letter and spirit. So the compliance team within the organization should be given a liberty to decide whether these actions or the business call are in line with the compliance expectations from the RBI or the other regulators. And being responsible for the entire compliance of the organizations, you also has to see the compliances related to the IT directions, as Vikash has rightly said. So, and apart from that, like HR related compliances, environmental related compliances, their legal actions, all of these has to be looked after as per the compliance perspective within organizations. And the regulator expects that CCOs are aware of each and every aspects of the company business process, and they are more into going through each and every process and evaluating whether this are in line with the regulatory aspects or the expectation from the regulator side. So I think the CCO role is critical for an organization, and it has to be given proper independence and the authority to decide each and everything.
About the importance of CCO and growing importance, it's just not today importance. I think there is a need for strengthening the role and expertise. So now I'll quickly move to Ramesh ji on the next question. How the CCO can be the owner or take the onus of implementing the compliance facts? In the sense, how in terms of your governance, like board, how it level, because you interact with the board very directly on the compliance matters, your CXO level as mentioned by Savitri ma'am, and also on every employee. As we mentioned earlier, the compliance function should be owned by every employee of the organization, just not a CCO's job. Otherwise, we will never be compliant or we will never be following the rules and guidelines. So on this factor one, on the second part, how can we utilize the third party knowledge partners or big four or whoever, like today Sir is here with us to share his knowledge. How do we collaborate with these knowledge partners, including the new softwares have come. Today, there are people coming out with the compliance softwares. So these things, Rameshji, if you can throw some light.
Sure. CCO perspective. So CCO is not just only reading the regulations and then get the thing of advising somebody to do it. So the primary thing requirement for a CCO is to understand the business and the functions of all the departments. And another thing is we are not just communicating this has to be done. So we have also has to explain if suppose you are not doing this, what will be the consequences. So even yesterday we had a discussion. So some of my guys, process people have seen. So while closing, we just close and come. So that's a simple answer. When we close the branch, so we close. What is that? So we record it and close. So I just asked them, have you not informed? Did you inform local police station? Did you inform the local labor office that you have already taken a shops and establishment license? Oh, why? Anyway, we are not doing business. But the consequences of that, you just vacate and go. There will be somebody else start the same name because they already know. People knows that there is a business around, and we are not informing anybody that we are closing a certain business. They can do anything. So that can come back to the organization in a different reputational risk and the legal risks as well. So likewise, each of the compliance is having a background to it. So which we have to communicate to the respective team why it has to be done, what is the importance of it. So that is very, very important for a CCO so that then only we can able to build the compliance culture. So building compliance culture is important role of the CCO. It is not that compliance officer can do everything. We can do a process, we can set up a process, we can educate, that's it. So and then we can monitor. But if somebody is not doing it, there is no point in having and putting it up a framework and the process. So making people to get into that is the very important role. That is number one. And the third party service, actually it is very much important because we are lacking on the compliance expertise, particularly in our NBFC perspective, because it's a mix of now the culture is coming. So few years before CRO came up, when the risk requirement came, now only we started getting the expert people. So likewise, it may take some more time to get this expertise. Till then, we have to, of course, have to engage third party like John Murray's or Big Fours, their expertise to develop our own knowledge and expertise. So that is very important. And now when it comes to, now at present we are, so there are multiple, as you said, 85 guidelines. It is only just a RBI. And if you have a different product, if you have a digital lending and again, it's a different. If you have a home loan, then that is again another level of compliance. And suppose if, like us, we are a listed, equity listed company and we are having a ECB, then another level of compliance at all. So it is very difficult, even humanly it has become impossible for us to maintain it in the Excel and Excel calendar obligation registers and all, to track also and to cross check. So that is how this technology is very, very important to monitor and to sort it out, and also giving a alerts mechanism in advance so that we can address such issues or in advance without any non-compliance. So each and every aspects of straightaway penalty, straightaway disclosures. Now, though, even if penalty also we can pay, it's fine. But disclosure in the annual report, board's report, everywhere is a problem now. So, and particularly when it comes to equity listed companies. So that become a reputational issue. Then questions from the investors. So that is how.
Sir, so as rightly pointed out my fellow panelists, it's a very, very dicey road. When the regulators expect you to be extended arm of them, there is also the business requirements which has to be taken care of. So I would say, the CCO has to perform the following. One is it's called the RASI framework, which generally IT companies adapt. So it's about responsibility, accountability, consulting, and informing. So for as a compliance function, as a CCO, the ultimate responsibility to ensure that these regulations across the regulators, be it RBI, SEBI, IRDA, the responsibility is mine. But it's also equally important that I fix up the accountability, because any regulation, it involves multiple stakeholders, be it the KYC or the IT GRC, which has been pointed out. the accountability will lie with my information security department or the IT department. So for me to fix up this responsibility and accountability, it's very important that I involve them, consult them, and also inform them as to how it should be done, why it should be done, and as Sir rightly pointed, if it's not done, what will be the consequences. So this responsibility, accountability, consulting and information is very important, and I think that the tone should be set by the CCO. And for that to be set by the CCO, I think it's very, very important for the board and the MD to, really give that space, as rightly pointed out, give that space and, support them and give that the due importance. And this will ensure that clear communication channels, and if you are able to do that and constantly monitor, it will lead to a compliance culture, because ultimately, even the RBI says it's all about, you have to build a good compliance culture. So I think the role of the CCO is to do that and ensure that we move towards a very compliant organization across all, be it RBI, as Sir rightly pointed out, the local laws. So the branch closure is one. So why RBI tells us that it should be informed? It's not about informing to the RBI. It also says that it should inform to the customers prior. So and the intent is that your customer should not be affected. So I think it's more about telling them to. It's not about only what is written. It's about following the intent of the circular. So if I'm able to do that, and if I'm able to make all my functional heads understand that, I think that is what the primary role of the Chief Compliance Officer is all about. Thank you.
Just to add one more point, the culture is that the compliance comes from the top to bottom. Earlier we are just highlighting the our guys, the juniors to just do the compliances. Earlier we were having the approach of bottom to top. Now the culture of the compliance is the top to bottom. The top management is have the mindset for doing the compliances right at the top, and they simply just giving the guidelines or kind of the intimation to all the employees of the organization to be compliant in each and every kind of the policies, all the rules and regulations around the laws.
Thanks, Vikas. So, 20 years back, when you get into your village and say there are two sets of people, one is educated, one is uneducated. Today, the distant disparity divides the people who know computer, people who doesn't know how to operate a computer. A computer can be your small mobile as well. In this world, Savitri ma'am, the entire, if you see 10 years ago, we used to make 20-30 pages loan document, and we keep them, stacking them. The loan document is keeping a big challenge those days, because we have to retrieve whenever the audit happens, either internally or external. But today we talk about e-sign, we talk about e-KYC, the LOS apps are available, the collection apps are available, e-receipts are being sent on the SMS system to the customer, and every record is digital. In this digital era, how do you inculcate this the compliance mechanism into the organization culture, and how difficult it is solving?
One of the major challenging factors where at some forums we have also expressed the IT related compliance. When I call it IT related compliance, the risk that is involved as part of moving to technology. Because moving from the archaical methods and moving into digital methods is welcome. It's welcome at every point in time, and it's very pertinent from a customer convenience perspective. But how are we clearly, translating all the controls in this digital setup is definitely something that I'm quite sure that no one has the answer in entirety to this, because we are quite divided on this, because there is a cyber security who looks at the information security. There is a technical layer to it. There are IT servers. There is data being managed. There is cloud services that we adopt today, and handling this kind of data is not something that is even taken care of in-house. The need to depend on external vendors to handle your data, to handle your volumes, becomes very pertinent today. So what is the kind of agreement that you've entered with them? What are the kind of legal risks that are involved in sharing this kind of data with them? How do you ensure that your data is disaggregated? I think the cyber crimes that we are, it could be a layman perspective, but I think it's all because of data theft. So how sure are we that, storing documents at our end and, retrieving, that mechanism itself had, a proper management system and required a whole lot of audit. Today, though I have layers of managing this data, I have an IS audit, frankly, we're not very sure if we are in a safe space. So that's my humble submission.
I think there is a road to go. Now, almost every organization has a CCO. Because in MFI industry, we always work with collaborative mechanism, sharing good practices, understanding various accidents and the bad practices which happen. But we discuss very openly among ourselves. So, in terms of the CCOs collaborating with the industry, and also the CCOs collaborating with the Sa-Dhan organizations, because this should be a continuous consultative process to strengthen this compliance factor. Because at the end of the day, every month or every 3 months, GG Memons have to go and meet governor and present the sectoral reports and all other informal, formal meetings he does. So how does this consultative mechanism can have this roadmap for the future?
Thank you, Rishi. So I would like to build a structure here, like they can sensitize members on each and every aspects of the regulators, what they expect from the MFI industries, and based on the best practice, they can issue the advisories to the various members, and this can create a uniform structure within the organizations, and they can follow the similar lines like what all expectations are having by the regulators, and MFI is following the same. And based on those submissions, like I have seen like MFIN is doing it quality assurance service, like there is some reporting has been happening on a quarterly basis. We can start with the scoring models based on the compliance structure within the organizations, and accordingly the organizations can be rated on their compliances. By conducting all of these seminars on a regular basis, we can have a best practice within the industries, and we can roll out as an advisory to the other members, so that they can also adopt the similar practices within their organizations, which can help them build the better compliance structures in terms of RBI expectations or the regulatory expectations from the different regulators also.
This rightly pointed out by my colleague Kapilji, the SRO playing the very important role, just to helping all the MFIs to just address all the issues, whether it is related to the SBR or some other places, because the SBR is also having the other issues. So they are discussing with the RBIs and placing the thought process that what kind of challenges are they are facing in between the SBR also. So as a corporate, we can just you can say write it down all the kind of the processes, all the challenges one go, and we can discuss the right forum over like this. We have this compliance officer conclave, so we can just place all kind of the thoughts, all kind of the challenges. So we can discuss over there, and whatever the best possible solutions there, we can find it out. Otherwise, we can just go ahead with the help of the SROs to the regulators.
Okay, 2 or 3 questions for the panel. The forum is open for the audience. And if you have any questions, you can ask right away, or else the panel members are available during the coffee break also. Any questions?
Over the group of CCO, you can help us with the IT guidelines and the things which are required to be implemented in the upcoming from 1st April, and what kind of policies should we adopt, and what should be the framework that it should not hamper the business of the company, as well as it should give us ease in working environment.
Because of now Stamp Act has been amended, and before some cap limit was there, 10 lakhs maximum limit. So now it has changed. Now how Karnataka ways, companies, how they will pay the stamp duty?
Salimat sir, you would like to answer that? The Karnataka Stamp Act?
Please repeat.
So Stamp Act has been amended. So before some limit was there, 0.02% of the sanction amount, 5 subject to the maximum limit of 10 lakhs. So now they changed this regulation, and they mentioned 0.5% of the loan amount. So how we will pay the stamp duty when you execute any, loan agreement.
But for agriculture, if you classify.
No, I'm not talking about agriculture. My register office in Bangalore. So when I get in sanction from any bank or NBFC, so how will execute it? Yes. Yes.
I am now traveling.
Sir, there are different charges sections. Different charges for different mortgages which we do actually.
No, my office is in Bangalore. I am having branch in all over India. Yes, sir.
So basically, even in the before this change also, the tax implications in Karnataka were very high. So I generally travel out to the head office of the lender to execute the documents. So yes, I can say
That's a coffee time answer, sir.
That is legal.
No, that is legal.
You can execute either of the places.
Yeah. So that's
any of your branches.
And some of the banks realize this and they also help me. Sometimes we bought, as this is coffee time. So we got adjacent Tamil Nadu is having very low tax regime on that.
Maharashtra is also having low.
How state government they will take in action tomorrow?
Karnataka and Maharashtra are known to be very high on the loan documentation.
No, my question is tomorrow I will pay stamp duty where is it lesser. So in future can I get notice from the state government?
No. Where the agreement is executed, there.
Okay, sir. Agreement I am executing in different state, but however I am filing the charge creation in my Karnataka jurisdiction ROC.
I think you have to pay that balance at the time of filing that.
So each time it's difficult to NBFC company to pay the stamp duty value of 0.5% of the loan amount.
That's what I'm saying. See, what generally is being done is that generally most of the MFIs are not giving the full stamp duty. They only do filing the suit or filing the charge sheet. At that time, if you pay the balance amount and do the complete the penalty, I think that is sufficient. That's what I was told. I don't know. Veterans can tell.
We will come back on that.
So it is up to you to decide which states you need to execute an agreement. In majority cases, if in case of NCD, if you see across the country, people we used to mark it as the landed property in Tamil Nadu, which is the lowest. Majority of NBFCs have some property, land properties. Likewise, but still they are in different places in the registered office. But here you are filing it with the ROC, which is an online. It goes to an MCA, so there is no problem. So no relation between the place you executed and the stamp duty you paid and the form is been filed with the ROC.
But ultimately, the document I'm carrying to my the Karnataka jurisdiction. However, it was executed in the Chennai or some other state.
So I'll tell you. So like a Maharashtra. So Maharashtra, they have very strict on it. So you cannot, if you execute any documents outside the Maharashtra, and if you take to Maharashtra state, then you automatically have to pay the stamp duty. So in that scenario, we don't even take any of the documents to there. So as of now, we have to see the amendment. If Karnataka also is similar to Maharashtra is very strict, then in that case you cannot bring that. So it is again in online, and some companies PCS will be filing it exposed to online. Even you cannot keep that in your file which you are print out or whatever. Like that it is in Maharashtra.
See, now audit will happen. So audit team they will sit in a register office. So how will submit all the document to audit, or ultimately you are bringing the document to your register office jurisdiction?
No, you are absolutely right. So one, probably we have to read the amendment correctly and we need to draw a conclusion perfectly. I request GMM sir and team can come back on this.
So that we will issue
please issue a guideline, sir, so that it will be clarification, because we can debate for another some time with limited knowledge, because we need to read the amendment first and then we need to infer. Thank you so much. Ma'am, it's up to you.
I just want to add one point. We thoroughly discussed about this aspect, and everybody was of the view that the household income assessment is not being properly done because there is no proper guidelines given by anybody. Each one is doing in his own way. So it was decided to constitute a working group, and it has already done under Sa-Dhan. We have people like we have opted people like Sadat from Muthoot, Vini Chhatri from Sudra, then Pahel, Madam Purvi, and Annapurna say Patna itself. And also from Avanti, he was also, Rahul was also there. So we are constituted a kind of a working group, and we are working on that, and shortly we should be able to come up with some kind of a standardization so that everyone can.
Appreciate that, sir. That's much needed. Thank you.
Discussion. I'll request Shariman sir to share a small requesting Mr. Manjunath, growth lead of Teamlease Erected, to share the presentation with us.
Good afternoon, everyone. My name is Manjunath Hamper, and I head the sales for Teamlease Erected. First of all, I would like to thank Sa-Dhan core committee members for providing this opportunity to present our software in a quick manner. So, in this taking us 10 to 15 minutes and going to help how we are helping companies to track and manage their end-to-end compliances in India. Now, before we start, we already heard about all the speakers speaking about the role of compliances, how it's getting complex and all. So I'm going to speak how the technology plays an important role in a compliance to track and manage. Now, before that, let's little bit go back. I wanted to start with two quotes, probably one from Bhagavad Gita, because everyone knows that as we are growing now, India is going to grow. The Amrit Kal started, and next 25 years is going to be a bull run. And what happened within 1960 with Japan or with Singapore in 1980, the same thing India is going to witness. Now you can see that we have mentioned there is compliant 3.0. Now it says that there is a ease of doing business that is taking shape in India. So the first ease of doing business happened in India in the year 1990 when the Indian economy was opened up for liberalization, privatization, globalization, and during that time only the MFI started in India. And then the second ease of doing business happened when the GST was introduced. And now we are the third phase wherein the rationalization, simplification and digitization. This is what is going to come now. And then with this, definitely all the speakers spoke here, there is a lot of challenges. With the challenges, there are business opportunities. Now today, if you see, if I again little bit have to go back, in the Bhagavad Gita in the 9.10, it says, in the last line, Jagat Viparvartate. The change is the only constant thing. Now same way if you see, the chief compliance officer or the company secretary or lawyers or the chartered accountant. Now they are more if you see in the Navagraha, the Guru Graha, the Brahaspati. So now who is going to where that the torchlight and they're going to advise to the board or to the top management what has to be done next when it comes to the business or the compliances. Now that is the kind of an importance today is taking for all the chief compliance risk officer. It is not that only what earlier somebody has mentioned ki, as a company secretary we do only board meeting and submit the report. Now the role as more advising how the business should be run. Earlier it was only done by the chartered accountant, but now the role of lawyers or the company secretaries are also increasing. Now that is very evident because whenever there is changes happens in the economy or in the country or wherever in the statutory law, there is humongous business opportunities because like Gigi Memanji also is mentioning and some of them are mentioning reading between the lines. That gives a lot of business opportunity also. Okay. Now coming back to the topic actually. So if you see as a team leads RegTech, we are one of the leading regulatory technology company in India, where we help companies to track and manage all your compliances across law of land. When I say across law of land, it covers end-to-end compliances, 360-degree compliances, and then currently we are serving more than 1,500 legal entities in India, which is spread across all the 20 states and 9 union territories. And coming to the NBFCs, we are currently close to serving around 50 NBFCs in India. And then some of them are with us for more than 5+ years. And then as a company, we are now a 10-year-old company, and then we are part of team leads group of companies. So team leads, most of you know, it's a listed company with a turnover of more than 8,000 crore. And then team leads mainly has 3 business vertical: employment, employability, and ease of doing business. And where most of the NBFCs or microfinance companies, they are availing both the services. Where one is the compliance software, and another one is the team leads is well known for the staffing, wherein we provide human resource as you are growing companies. That is the way it is. Now if you see, these are some numbers at high level, and then I'm also going to speak the exclusive NBFC report that we have released. Now if you see in India currently there are almost more than 9,000 plus NBFCs are there in India, and then at the same time there are close to around 200 MFIs are there in India actually. That is there. Now I'm not going to speak on this because already most of them have already spoken about this. Now any guess to run one compliance of one branch of an NBFC in India, how many compliances it takes? Any guess? Approximately. Can someone take mention a number?
Sorry, 1 second.
How many compliances are total applicable to run one branch of NBFC in one state in India? Any guess? Rough guess?
120.
Yeah, I think sir is saying 120. Anyone else?
600.
Okay, yeah, absolutely. I think closest to that. So you can see now, to run one NBFC branch in one state in India, there are 621 compliance are applicable. Now if you see again the category wise here, there are 2 things. I think Harish ji was also mentioning the labor aspect, and others were also mentioning, and the second the RBI. The 240 are labor compliances and 216 are your industry specific compliances, which is related to your RBI, and the industry specific only compliances. That's how the complexity. Now I was speaking to some of the gentlemen in the morning and to some of the ladies, they were mentioning that there are hardly around some 30-40 compliances what we have to do. But the reality is different. That's what I'm presenting here, how complex it is. Now we are helping companies, and this is the exclusive report. This is the current from our data that we have, as we have taken to run one single NBFCs. This is the amount of compliances it will take here. Now if you see, these are some of the compliance challenges which is faced by the NBFCs or MFIs in India. I think most of them are covered, but I'm going to cover the first one and the last one. I'm not going to cover because everyone is aware of that. But the main challenge is why people look for a partner like us. Is everyone knows that Indian compliances are very complex because we are dealing with too many acts, filings and all. And then these compliances are not only complex, but they are highly dynamic and highly fluid. So what we have seen, every day in India there are 10 to 20 compliance changes happens, and then there is no single government portal to track all these changes. And then on top of that, we had done this survey 3 years before. Now this has came as to surprise to us also. 80% of the companies, I'm repeating, 80% of the companies in India, including some of the listed companies, are still using a highly manual, ad hoc, paper-based and people-dependent compliance process. And that's how as a cause and effect, when you go there, it starts with the problem that then companies ends up missing certain compliances get delayed because there is no tracking and management software, and then the organization ends up paying the penalty. And then when this kind of a news comes into the media, then everyone knows what's happening today. Like we used to read, if you see 5 years before, once in a month or once in a year, or once in a quarter, there is a news on the compliance used to come in the newspaper. Now every day there will be one column on the compliance. That is the fact actually. Yeah. Now coming to the first, how complex India as a country, when it comes to the compliance. Now we did the study, and just to know that to do the study, the entire Indian compliance database scanning, it took us 6 years with the help of 70 lawyers, 20 company secretaries and 10 chartered accountants were involved to doing the study. Because there was no, including government of India or any other players has not done the study, and we were the first player to complete this study. And then we found out that India as a country, we are dealing with, there are 1,536 acts, 69,000 compliances and 6,618 filings. Now this number 69,000 was earlier, it was 85,000. Then during our first ease of doing business report, we had submitted to Prime Minister to reduce some 20,000 compliances, and in the year 2019, the Prime Minister reduced 15,000 compliances. And then one more good news I can give, we are also working with we are one of the advisor to the Government of India as an external advisor to bring ease of doing business, and we are already working on the second set of compliance to be reduced. Now probably another 10 to 15,000 compliances will go off from this list. So that is another thing.
What is that coloration indicates?
So that indicates the state-wise how it is
stronger or?
Yeah, the state-wise, if you see here, if I have to speak about particularly like Karnataka government, then it shows how many compliances. Anyway, we are going to share this presentation with Karthik, and probably Karthik will forward this to everyone. So you can go through this also. Yeah. Now coming to the company, now how this is dissected. Now like again a lot of people are mentioning in the beginning. In the morning, all our panelists were mentioning there is not only RBI compliance, there are a lot of things. Now this is how the dissections happen. So now if you see, and this is common in any country, if you go in any country, because at the end of the day, you run any company, at the end of the day, we are dealing with a human being, human resource. So in 100 rupees pie, the 40 to 45 rupees is eaten by the labor. So that is the first biggest category. Now under labor compliance category, we cover all your shops and establishment, minimum wages, maternity act, payment of bonus. So anything related to labor is covered under the labor compliance category. Then the second most important, as I spoke, industry specific compliances. Now here all your RBI, your PMLA, all your KYC related, and then any kind of industry specific compliances, that it will be covered under this. And then next there is a secretarial. Now under secretarial, if it's a listed company, then we have to track and map both SEBI plus and MCA compliances. If it is not a listed MFI or NBFC, then we help them to track all the whatever applicable as per the MCA. And then comes commercial compliances. Now commercial compliances includes any company dealing with legal metrology like weights and measurement. Like some of you must be dealing with gold loans and all. Then all those things includes legal metrology, weights and measurement, then your precision tools, competition act, BIS hallmark. So all those things like sir was mentioning the minimum electricity bill or electricity act. All those things comes under the commercial compliances. And the next there is finance and taxation. So here all your direct indirect tax, GST, FEMA, EXIM, CBDT, CBHT, DGCI, all those are covered under this. Then the very important one EHS, which is now termed as an ESG, environmental health and safety compliances. Now you may surprise I am running NBFC, what are the kind of NBFCs EHS compliance are applicable. So mainly if you see now we are using all the e-waste, laptop, desktop, and then there are we also use DG sets, so all the batteries waste. So all those things comes under the EHS compliance category. Then the most important one for the MFIs and general compliances, we also we cover all the local compliances, because most of you have branches in the local municipality or tehsil or Jilla Parishad level. Now all those laws also we cover here. So that's how we make sure that end-to-end compliances, when I say in the beginning across law of land, we make sure end-to-end is covered for you through the software actually. Now the second challenge is, I said the compliance are very complex, and how fluid regulatory environment. So this gives certain numbers. So if you see this year alone, means this year now we have crossed. If you go to our website, there are almost now 8,200 compliance updates taking place in the year, and last year it was around 1,000. So every day, like I am saying, right, every day there is a 10 to 20 compliance changes happen. Now how do we help customers to do this? Now this is our another USP that we have built over a period of time. So if you see, we are the only private company in India who publishes all the legal updates that takes care in India. The compliance updates. You can go to teamleaserectech.com, our website, you can see that. And then what we do here is, we scan through more than 2,231 government websites using our internal product, which is built on artificial intelligence, machine learning, Christopher hashtag keys and OCR technologies, and then we give accurate compliance updates to all our clients. Now, if you see just an example in this time, if it's an RBI circular, so then we have like I said right now we have 75 team of lawyers. Now out of that there is a 10 people team who works only on the RBI compliances, because we know that IRD is the first highly regulated authority and the second comes RBI. So whenever there's any circular comes, then the team does the dissection, and then whatever is applicable to a particular client, it is automatically mapped, and then there is a weekly discussion also happens with the respective SOC of the client. That way. Now these changes, you might have question, what is these changes that we cover? Now these are the 7 reasons why a compliance updates take place in India. It includes change in the date of filing or change in the form and all. And then very interesting, we also cover if any new act or new law is coming, that is also covered as a part of the service in our product actually. So if any new act is coming, you don't have to worry, because most of you will have a question, existing compliance you are going to cover. Now what if some new act, new changes happens, everything will be covered. So that way we assure you that. Now these are then some of the slides from the product. The product comes with a color-coded drill-down dashboards. Now also it gives risk-wise analysis. If you wanted someone to see department-wise analysis, so all those things we are giving the product, and then the entire product is available both on the web plus on the mobile app. So on the mobile app, all the functionalities are available. So at a senior folks, if they wanted to approve a compliance on the go, they can just log in. They can look at the document and they can scan and they can approve. And then the product also covers not only your statutory compliances, it also covers all the licenses. And then the system has a reminder system. There is a calendars are there which gives which gets synced with your emails and all. And then it also helps to track and map your all internal compliances. Other than statutory compliances, every company as per your company policy will have internal compliances. Even that also comes with compliance product. So these are the things we are covering here. So these are some of the screenshots. I'm just covering how it looks on the mobile app. And then these are some of the, I mentioned very few names. So currently we are, like I said, right, we are serving close to 50 plus NBFCs. This includes microfinance companies like Jagran Microfinance, Ashirwad, Annapurna and all. And some of the clients are also here in this event also. And for some of them we are implementing, some of them we have already implemented. And we look forward to hear from you, and then we are here to help you.
Yeah.
Thanks a lot.
Thank you.
Any questions are there, you can let me know.
You
Now,
can,
yes. Yeah. Thank you.
Thank you, Manjuna. I'll request Gigi sir to give a small token of gift to Mr. Manjuna. Now I request Mr. Jagadish Ramalugu, MD and CEO Pragati FinServe, to join us on the dais. Mr. Shivakumar, partner A. John Morris and Company. Mr. Shudev Kumar, Chief Compliance Officer, ISAF Small Finance Bank. Mr. Mohan Prasad, COO, NAFPACE. Ms. Sneha Sharma, CS and Legal, Fincare Small Finance Bank. Ms. Maya, Head Corporate Affairs, Keshav Prabha Microfin.
I am Shivakumar from John Morris and Co. partner.
Come here.
And that is about me. I am basically a banker and around for 34 years, and then I in practice for the last 6 years, and currently focusing on this NBFC sector also. I am a qualified chartered accountant, DISA, BGL, then that is the pharmacy credit certificate, certified professional. So with regard to start with, growth in business is better, but business growth with compliance is best. Normally, ancient auditors used to be flagging the issues only. But as far as we are concerned, as far as the current auditors are concerned, they are not only to have that is flagging the issue, but also to provide solution. That is the management is also expecting. We also try to do justice. As far as one of the challenges in a lighter mind we used to say, we used to experience this, so many compliances are there after 31st March. With regard to GST, 20th April is the date, and with regard to 26 days, only 31st May only we have to complete. But as far as every company is concerned, they expect the audited financial statement to be before 30th April. This is one of the challenges we are facing. So even though we are appraising the people that there could be the notices may be there because we will not be, because we are not magicians, you know. So we used to tell, but despite that one, we have to also work with the challenges. We try to, that is, we try to make around 15 minutes presentation. I will try my level best to give justice to that. Microfinance, as you say, that one is for the low income people. That is for the low income people to serve, because many people might not be, that is if you see that history, that one, the banking people may not be able to, that is the low income people may not be able to access to the sector. So for that only, for the low income people also have to access to the banking services and other things, MFI has come, and definitely it has made a lot of improvement with regard to society changes and the reformation that has happened because of MFI. Sorry. Then RBI complaints. This has come around the 60 years. The NBFC regulation turned to 60 on 1st February 2024. There is evolution with regard to, because the complaints and new regulations come whenever there are deviations. The complaint, that is with the rules, people learn to do the deviation. With the deviation, that is the statutory people used to make another control. Then with regard to scale-based regulations, there are three layers are there. NBFC upper layer, up to 10, that is in the upper layer they are concentrating on 10 NBFCs RBI has identified. Some are LIC Housing Finance, Bajaj Finance, Tata Sons, like that. Then NBFC middle layer, if you see that, deposit taking NBFC and non-deposit taking NBFC with asset size of 1,000 crores or more. CIC, IFC, HFC, SPD, IDF and certain government-owned NBFCs, that will be covered. NBFC base layer, NBFC P2P, NBFC A, that is P2P means peer-to-peer, then account aggregator. The NOFHC means NOFHC, non-operating financial holding, they don't other operations, but normally they will be promoter company for promoting setting up banks. And then other certain other government, and other certain government owned NBFCs. Then base layer only I was just telling you, NBFCs without public funds and customer interface. Non-deposit taking NBFCs with asset size less than 1,000 crores and certain government owned NBFCs. Because past year time I am not able to fully go into details of that one. This presentation will be shared so that it will be helpful for the participants. Then requirement of NBFC, what they say, 10 crores is the achievement. Currently the current MOF 2 crores, 5 crores is there, and by 31st March 2025 it has to reach 7 crores. And with regard to North-Eastern region, they are giving certain coverage. Up to now it is 2 crores. Up to 31st March 2025 they have to reach this 5 crores. By 31st 2027, 10 crores they have to reach this NOF. Then only to sustain in the industry that they have to improve the net owned funds to that extent. Then with regard to qualifying asset, that is 75% of the total income, we have to, the asset should be on a qualifying asset. NBFC does not qualify as an NBFC MFI, cannot exceed microfinance loan exceeding 25% of the total loans. Then qualifying asset criteria. When we talk about qualifying criteria, 3 lakhs rupees is a 3 lakhs rupees has been prescribed as far as the income is concerned, and out of which 50% you can give the loan. The only problem where everybody, that is the previous panel, everybody has discussed was that one, assessment of the income is still a question. As far as the regulated sector is concerned, assessment of income will not be a major problem. You can get all other type of their income statement, their ITR and the salary statement, all these things. In this sector it's a big challenge and it is also subjective. The problem is that the field level functionaries, if they wanted to increase the target, if they wanted to achieve the target, if they just do certain manipulation, ultimately the end borrowers will not be able to, because at that time you will be getting the money, but you will not be able to make the repayments. So in that case, as rightly said, Sir has also told that one committee has been formed that this is one of the important requirement and a timely requirement that has to be done, that the assessment of the income has to have certain validations. And then penalty charges, as we say that there is no prepayment penalty charges, but there are charges for the interest for the delayed payments, as of now for the NBFC MFI. And then with regard to other charges, see, one thing is that, problem is that, I am basically a banker I worked in private sector, the public sector started and private sector under. The banks initially started with a motive to serve the people only, honestly. That is, if you see from nationalization period onwards. But slowly it is moved from what we honestly feel that one, from the, that is, service motive to profit motive has gone. In MFI also that we are facing that one. Because including the interest factor and all determination of interest factor, ultimately when you charge too much interest, from where that gain will be, from which portion that gain will be able to make the payment. Because sizable portion will go as interest alone. So balance portion only he should be able to consider. So whenever the interest factors are determined, interest rates are determined, these social aspect of having commenced this MFI also to be considered. And then with regard to business principle criteria, financial assets should be 50%. This is one of the major challenges MFIs are facing. 50% of the assets should be a financial asset. That means it should be, the assets should be deployed at any point of time in the MFI. And 50% income should come only from MFI income. Because now the BC model is also in in vogue and this one. But always ensure that it is an MFI and this particular criteria has to be definitely met. If it is not met, what is the problem? RBI is always on the watch. RBI is always on the watch, and they will be making unnecessary penalties for that. So there should be a third eye in the that is in the company itself to ensure that these ratios are met at all times. And with regard to capital requirements, Tier 2 capital totally should be 15% of the aggregate weighted assets of the balance sheet, and the Tier 2 capital at any point of time shall not exceed 100% of the Tier 1 capital. And then asset classification. Standard assets means the assets there is no default at all. Non-performing assets, that is 90 days, if there is an interest or principal overdue, it will become NPA asset. Non-performing asset related to microfinance loans, provision norms will be either 1% of the total outstanding portfolio or 50% of the aggregate loan installment which are overdue for more than 90 days and less than 180 days, and 100% of the aggregate loan installment which are overdue for 180 days. For standard, in this NPA only, that is, as far as the that is senior management of the MFI has to be very, very careful in this aspect. This is one of the area where the chances of, that is a kind of evergreening. Normally the banks, it has to happen through evergreening process. They can postpone the substandard asset to a standard asset for some more time. The standard asset, it will be kept in the standard asset itself. This area has to be carefully monitored. And then standard asset provisions of micro loans are up to 0.25% of the outstanding loan portfolio for NBFC base layer and 0.4% of the outstanding loan portfolio for NBFC middle layer. Then a fair practice code based on these directions shall be put in all regulated entities with the approval of board. The fair practice code, it has to be, because the borrower has to ultimately know. If you see that to a new generation bank at all, one of the problems, I worked in the banks also. What I am feeling, many a time the borrower is not informed at all. The problem is that he will be having that, yes, this is my ultimate, every month I have to pay this much only. Suddenly an interest factor will come, or some penalty charges will come. So any kind of changes MFI is doing, ultimately everything has to be communicated to the borrower. He has to be transparent on this. That is, the MFI has to be transparent in communicating all the changes to the borrower. Then Ind AS applicability, what happens? 250 crores and above, that Ind AS will be applicable. So in those cases, whenever the MFIs have to be always on the watch, when there is a chance for increase of this net worth of 250 crores, India's applicability will be there. They have to train or recruit the people, ensure that one, the India's compliance is fully completed. And then liquidity risk management. See, ultimately what I am just telling you, we have seen so many, that is mismatch as far as banking is concerned. One of the major factors is that one, mismatch and diversion of funds. Diversion of funds can be that one diversion of funds going out of the system. Another diversion of funds is that there is a mismatch, short term and long term. They used to take the short term funds and use it for long term. When the customer is asking for that one, we may not be able to do that one. Many fatal cases also happen that even though person is having funds, long term funds they are having, they may not be able to realize in time to pay the immediate demands. So ultimately what will happen, this fellow will end up in, even though he is wealthy, but he is not able to pay in time and he is subject to so many harassments. For that purpose only, these liquidity risk managements, all the points are there. Liquidity risk management, policy strategies, that is also for that. Management information system to ensure that one, what is your, asset. Can you just go there? No problem, no issues. Then digital banking. So today digital banking is one of the important factor that slowly from, we have to just move from the manual to digital. That is one of the criteria. It also depends upon the funds requirement as far as the MFI is concerned. Slowly they have to go for digital. Then only they will be able to have the, it will be helpful for reducing the cost and also retrieval of data in time. And then with regard to memberships, all the 4 CSAs, everybody has to register. This is mainly to register that one. If any other person wanted to give you a loan, they can just check any default is there for this company. So effectively all the 4 CSAs, they have to just register. And then with regard to RBI report, these are all the RBI requirement forms, that is XBR, and that is this has to be complied with without a lapse of time. And then with regard to gaps identified, there are so many gaps with regard to this compliances aspect, because one thing is that people will be more concentrating on the targets, recovery, loan disbursement, all these things. But any of certain important gaps, they have to just address in time. So first with regard to the third B of the RBI, they talk about the non-maintenance of stipulated NOFs. This is one of the challenges always happen. The problem is that MIFI they are having some business, they immediately wanted to go for another one. When they wanted to go for another MFI, what will happen? These funds will go to that. Because of that, this is one of the problems they have to take care. This is one of the child means they have to take care of the child first, then only they go for the another one. And then not meeting the business principle criteria. That is whatever the business principle criteria is that yours is an MFI, you have to concentrate on the MFI. This particular concentration is not there in many cases. And non-compliance to scale-based regulations. Scale-based regulation, there's a lower and all we talk, upper. In this guidelines, whatever the NOF, maintenance, all these things have to be maintained properly. Then, okay. With regard to the non-creation of asset standard, that is standard asset provision. Because as far as the banks are concerned, there are 2 things. Any MFI, everything is there. Only 2 things. One is income recognition, other is your portfolio. That is portfolio management with regard to NPA. NPA is a major challenge and it has to be properly classified. Then only you will know the real profit or loss. And then excess leverage ratio. Excess leverage ratio means 7 is, I think, they identified as of now. You cannot go beyond 7 with regard to debt equity ratio. In many cases, it is also crossing. And then delay in uploading submission of data to various entities. See, that is one of the speakers have put very clearly that one. Many cases, what will happen? Your cost of that is filing cost will be very less, whereas penalty charges will be more. If you do it in time, it will and then stitching time will save 9 like that. That is one proverb with that. Like that, they have to do it in time. Then it will. That is the penalty can be avoided. And then wrong classification of qualifying asset. That is as a classifying assets. Also, if they are wrongly classifying, then you may not be able to know the correct portfolio. Incorrect risk percentage of weightages have been assigned to on and off balance sheet assets because where you are risk-weighted average asset, we are getting only the on-balance sheet and off-balance sheet item. Certain classifications are there. If you do a wrong classification, you may not be able to get the correct, RA, we used to call that is the CAR. You may not be able to know that correct CAR, you will not be able to know. Lack of corporate governance. Directors not aware of. One more thing is that whenever the selection of directors are concerned, with the proper, with regard to their experience, qualifications has to be noted. And then only, otherwise what will happen? Tomorrow questions may come from RB. This factor has to be considered. Companies not from, one of the challenges many a time what we have also experienced for some of our people, that they will have registered office on place and nobody will be there. When the RBI goes for inspection, the person again it has to come and we have to request for another this one, that is another time, and ask them to come for inspection, all these things. Whenever there is a register office there, at least somebody has to be there to answer for the questions at least. Though the main functions may be operating from some other place. And then non-complying one, digital lending when outsourcing arrangements are entered with the company, lending services not complying with RBI guidelines on digital lending. Where they have just come out with certain guidelines, the MFIs have to follow the same. And then late filing of returns to RBI. And then challenges and with regard to this, as under a significant transaction, there are certain challenges faced by NBFC. With regard to regular banks are prepared with several refinancing options is not available for NBFCs. With regard to the banks, they are having, but this NBFCs are not having the refinance fund, so they have to go for high cost funds. And then KYC is one of the factors because state to state there is a differences are there. If a standardization is happened, that will be better for all the NBFCs. It will be very helpful. And then manual handling is one of the major factors which they cannot avoid because they cannot also invest more.
Discussion. We will get into the discussion.
No problem, sir. No issue. Okay, thank you. Because past of time, that is, I'm just closing it. Thank you.
Look at the current NBFC landscape. We just saw the 9,300 plus NBFCs. Nearly 200 of them operating in the microfinance space. But the real, because it's a lot of the team here, a lot of people here in this conclave after the microfinance space. If you look at a little closely on the microfinance space, the sector serves almost 7 crore households, right? With a 5 lakh crore AUM. If you look at the total AUM served to the NBFC industry and the banking industry, it's very, very small. It's less than 3%. But in terms of number of borrowers that the sector touches, it is 17%. And therefore, you see why RBI is having significant amount of focus and interest as far as compliance is concerned. Second part is the segment of customers that we work with, the borrowers that we work with, are low income, highly sensitive, low on literacy. So it's all the more important that the challenges in terms of compliance, while RBI insists on transparency and focus on right pricing and customer support to the segment of borrowers, it is up to the individual organizations to maintain that level of compliance which ensures these requirements of the governance are met. So, and this is something which is with the sector scale getting larger and larger, there will be more and more focus on this space. That's a background to the discussion we had, and I welcome all the participants to the panel. We have Mr. Mohan Prasad and Maya from the NBFC MFI space. We have Mr. Kumar, who we just heard, a sectoral expert on compliances, and then we have Sneha and Sudev from the small finance bank. So it's a very, very good mix of panelists. So with that, I just move to the first question. The way we will run is we will have 4 to 5 questions. I will just request each of you to share your views and experiences for under 2 minutes in the interest of time, so you can move on. Maybe towards the end we can have 10 minutes for any Q&A which the audience may want to have. So the first topic that I would like to address to the participants of the panel here is, I think the 621 compliances in the NBFC space, right? It's definitely being the chief compliance officer is the most unenviable job in your company, I'm sure, right? So, I would like to open the floor by asking each of you. starting with Mr. Mohan Prasad next to me. What are the challenges that you are facing, specifically from the RBI context, as a head of compliance in your organization?
Thank you, Sa-Dhan. Thank you, sir. In case of SAP, so that is why RBI is coming out so many circulars, and many things it has been said, but I would like to, but nobody has, although most of them may be knowing that PML Act is one of the major challenges for NBFCs, because everybody is thinking that we are not bound by this CTR, STR, all these things. So this is not like that. Particularly deposit taking banks, they have furnished. But now this Paytm bank, all other banks you have seen, most of the RBI penalty are under section 35 KYC. 70% compliance penalties will be by RBI. So whenever there is a penalty, you have to report regularly to so many authorities. It will come in every RBI inspection, every audit, every inspection, it will come. So we should avoid all these things. PML Act, actually now FI India has issued circular for generating alerts, RFI, red flag indicators. So some alerts like if some depositor has come to deposit any amount in the bank, he inquires and he is going back to again without depositing, then that is also an indicator. Why he is going back, whether he was having proper KYC or not. So many things we have to look into it. And when RBI compliance, I would like to tell that RBI is insisting on sustainable compliance. So compliance, simply we observe that compliance, so RBI has observed some critical findings. So we are writing, yes, noted, we will be doing in this meeting, next meeting. So RBI is now focusing on sustainable compliance. Whether have you rectified the legal mistakes? Are you going forward to take any deadline? Has it been discussed in board or other committees? So you have this sustainable compliance. So that is the main challenge we are having. PML Act, this is STR, CTR, because now this is going to happen in NBFC also. Now the PML Act, this is very severe.
Thank you, Mr. Mohan sir. I think the key point is trying to say is that not just one-time compliance, but sustainable compliance is very critical, and this is something which the regulator is closely looking. We'll move to Mary from Keshav Prabha. So you've been an NBFC MFI, I think one of the smaller NBFC MFIs operating out of Kerala, if I'm right? So what's been your experience with the regulators? Has it been somewhat different from?
For providing me the opportunity to come here, and from that point of time, I'm with Keshav Prabha Microfin. Earlier it was KPP FinCare. So, like RBI, I had a good experience with them because from starting they were very helpful, and for the last week we had a 3 days RBI inspection where they were focusing on the pricing of credit of our MFI, and they deeply went into the software we are using, the way we collect the KYCs, etc. So as of now, yes, there were challenges faced by us, but RBI as well as Sa-Dhan were always in support for us. So I'll add on points. You can just
Sure. Thank you. Both FinCare and has been a part of microfinance space earlier. So, what has been your experience in the last 7 years since you have been a small finance bank in terms of compliance? I'll just request Neha to share her experiences. The mic is working with you.
The entire team of Sa-Dhan, from GD sir to Karthik to Shyamashri for working day and night and organizing this wonderful event. And thank you Dwarkanath ji, the ex-officio member of ICSI, as representing my institute as well as the NBFC industries and the MFI all over. And lastly, I'm humbled and I would like to thank the audience for being patient enough and for taking it way forward. So coming back and adding on to the experience of the SFBs, I would start with the thing that starting with from a layman side and a layman approach, there are very few who knows about the SFB. We all are learned and we all are future stalwarts, taking the FinCares, the SFBs going forward. So we always know and focus about the public sector's bank, the private sector banks. Lastly, we come and we talk about the SFBs, the small finance banks. So RBI certifying the small finance banks and institute like that, that was a need of the country as well as that was the need of the country and that was the need of the society going forward to foster the needs of the smaller segments. Going forward, India has been always looking for angel investors going forward for the growth of the industry, the growth of the financing institutions. So these SFBs were in very much need for the country as well as the economy to go forward. RBI, we name RBI as the most feared regulators. So going forward, RBI being a very detailed, in my experience, I've worked with SEBI, I've worked with RBI from central to state to also private entities and all government regulated bodies. So recently only many of the SFBs, we completed our RBI AFI inspections and audit all around. So what you will experience is that RBI has a very different approach to many and everything. That is the reason they are the Reserve Bank of India. We tell them as the. There has to be a thing to be told a person or an institute as the person. What we feel, RBI always has a detailed approach to everything. To add on from the senior panelist earlier, the panel section 1, what Hariji told, company secretary. I am a company secretary and the head of compliance. So is a full-time job, but a CCO, compliance officers are a double full-time job because they deal with all of the functional heads. We company secretaries, we take care of the bodies, the board of directors, the meetings, the shareholders. We become a link to the investors and the companies. But RBI focused and made it a need for the compliance officer while their amendments in 1st April 2023, it came out with a need for a compulsion of a compliance officer on a bank. So when they see a need, they take out the circulars and master amendments. Every week we read about the amendments coming forward, the master circulars. Whenever a seed gap, like what sir, I would like to add on what sir said, whenever there is a gap between what the law says and what has been actually practiced in the society, there comes a need for a circular, the amendment, to go show us the right path and the need. So what I faced is that RBI, we did our inspections, we completed our AFI audits and everyone, and RBI is RBI, so they had a lot of observations and points to be dealt with all the cross-functional heads and all the branches level and everything all around. Their detailed approach, I would just add on, being a CS, I would add on a very small point. We have our meetings, so we minutize our meetings. So there's a very small point, the meeting has been done, we'll minutize. To my surprise, RBI had an observation also on the drafting point of the minutes. We company secretaries, we draft a minute has been done, this has been approved, this has been disapproved, gone. Okay, so this is the thing and this is the outcome of the minutes. RBI are such keen, eagle-eyed personal heads heading, so we are in a very right hands being regulated by RBI. One of the observations which I would like to share among the dais and the audience over here was, their observation came out that the minutes have been beautifully minutized as the items approved and disapproved. But what about because if you have a board of members like 11 to 15 board members, we tell it as unanimously approved or a point comes as approval. But what about the dissents and the observation that other members would have gave in your board level? Why have you not monetized in the bank? Because bank is a very crucial thing. Your customers, your investors, stakeholders, everyone depends on your policies. So apart from the policies and everything, we very much focus on the bank. That these are the policies, these should be reviewed. They come up with this critical kind of a thing that also add on the observation and the dissents, Means if in a board of 11, 7 members have approved, my directors have approved, so I take it as approved my resolution. But RBI focused it out and brought to our notice beautifully that in spite drafting the minutes so well, but I would like the team to also add on about the dissents and the observation of each of the board members. So every point and every small and minute observation is a very big thing. Whenever we have a responsibility on our shoulders, so they go forward with every detailed approach and every following all regulations and everything all around. So this was a very good thing that I shared with RBI. So how to have a detailed eye and a keen eye approach over things and going forward.
Finance community still continues to be supporting the microfinance community both as a bank as well as a lender to MFIs. So they would like to tell us about your own experiences with compliances, specifically in the RBI context, and something that you can share specifically to the other NBFC MFIs out here in terms of how you built your approach to RBI, what sort of a approach works with the Reserve Bank.
And for a banker, like me, thinking about lunch before 2 o'clock is a sin, so I don't mind. So I hope you also would like to do that, right? Okay. So coming to this, basically I would approach it slightly from a different angle. So I don't look at it as a challenge from the part of the RBI. I would like to look at it as an opportunity. It is not a rhetoric. I don't want to just be goody while telling that, because see, as an organization, I think morning Dwarakanath sir was telling about an organization which asked him to do something, but that organization itself is not there now. So we all are facing some existential challenges. At any point of time, we may sometimes go out of the whole ecosystem. So what is required is that we should play within the framework. I would like to play with 15 players in a cricket match. Whether I will be able to do that? No. I would like to say that I want to see that my 22-yard pitch, I want to make it 18 or 15. Is it possible? No. Because there will be some sort of framework provided by the RBI or any regulator for that matter, not only RBI, SEBI, PFRDA, IRDI, then your NPCI, your UDAI. So we need to fall in line with that, because that is the, and again, where from the RBI comes, we need to understand that. RBI is having two broader responsibilities. One is to see that the stability of the financial system and thus the stability of the economy. This is very, very important for RBI. So definitely they will have to take all the steps to ensure that the economy and the financial system, banking and economy is stable. It doesn't get into some unforeseen kind of circumstances which totally destabilizes the system. That is one thing. Second thing, they are very, very much concerned about the customer. Because basically what happens is that customer does not get a voice. Because the bank or any other entity is a very big entity having colossal size standing in front of a customer. So RBI is very particular that these two are the most important. RBI is having a lot of other responsibilities, maybe banker to banker, lender of last resort, cash issuer, all those things. But as of now, RBI looks at these two things. So from that angle, I think we should also align to create a sustainable organization, which we can look, say, 50 years now, 100 years now. We should definitely align with that. It is for the good of the financial system per se and for the good of the customer.
Thanks. The compliance officer's role.
Sir, compliance officer's role is a double-edged, effectively. They have to as far as they are concerned, they have to also be part of the board, be part of the management, but at the same time they have to seclude themselves whenever there is, whenever whistleblowing is required. In those cases, promptly reporting to the statutory authorities for the requirement. So their role is very, very of a difficult nature. The thing is that they are all, some suggestions from my side, what I can say that one. Proactive, say for example, that is, a timely submission has to happen on 30th June like that. The planning should not happen from the 25th or 26th of that one. So as a proactiveness, the promptness can be done through a circular in time as far as the management can, and the CEO can facilitate for that one so that their job will be less. So the number of complaints or non-complaints are less. For them, that it will be good for them. And the second, knowledge level also to be one of the problem what I have seen that one. Many places, the knowledge is one of the criterion. The people at the execution level, they are not having the knowledge for what they have to execute and all. This is training is one of the important factor that has to be done so that this can be reduced. This problem can be reduced. And with regard to reporting to the RBI, the transparency is very important. Many a time what we have seen as a chartered accountant and in practice and with regard to dealing with the clients, whenever the queries are coming, the cross validation is not happening at the division, that is the company itself. So they are able to get the query based upon whatever we have submitted itself. So effectively one place we will put some number, in other place we will put some other number. These type of a validation, if it is happening, the number of queries can also be reduced. And also we think only about the timely complaints. Quality complaints is also important. Thanks.
Thank you, sir. Sustainable complaints important. We have seen RBI being helpful to smaller entities in terms of scaling their compliance systems and running the business. We have seen Sudev talk about the importance of understanding the RBI's thought process to keep the stability of the financial system as well as the borrower interest. I think Sneha talked very clearly about the eagle-eyed approach of RBI. I think very different takeaways. I think finally we have seen that observation from Mr. Kumar that the compliance officer's role is like a double-edged sword. So it has necessarily, it's important that the competence and continuous training is an important aspect. Thank you very much. So we'll move to the next question which I have for you, a very specific question. This is something of why I chose this is because it's very practical, high impact to all of us in the MFI space, in the companies operating this space. We're talking about the qualifying assets issue. We know that the qualifying assets, basically this space is, we have a 75% prescribed qualifying assets along with the 3 lakh household income limit, which is prescribed. Similarly for small finance banks, there is a 75% priority sector lending limit. So RBI in its wisdom has put out these limits in the sector. So I just want to understand from each of you, what are the challenges you are facing with relating to meeting the qualifying requirements if you were to approach it with a true sense of being right in terms of the data and the customer data that you capture and take a lending decision. I'll start with Maya first.
Regarding the household income, as part of our RBI inspection which we had last week, they had asked for the household income, how we are calculating, how we are doing. So first of all, household income, there is no document or there is no data where we can get the household income of the customer. So we have some internal checks inside our app. So that is like the field officer or the collection officer will go to the household. He'll ask the member, husband or the earning other members in the family. Then he'll check the assets like TV, fridge or washing machine or something. Then he'll capture the photos and then he'll get to know the occupation and like he'll ask for the savings like small chitties or something, do you have something. So that are the internal checks we do. And obviously the field officer will go to the center leaders or the neighbors of the customers and then inquire. But as of everything, RBI said that we have to just move ahead and get solutions to accurately assess the household income. But still we don't have anything written anywhere how to assess this. So it's a really very big challenge for us to get the household income of the, and as well as like if I'm giving the loan to the customer today and 4 of them are employed, they are getting the wages and all. See, for after 3-4 months, one of the person loses his job or something. So again, it affects the loan which I gave to that customer.
So if anyone like RBI or Sa-Dhan or can come up with a household income assessment, some criteria would be helpful.
While she expressed that capturing the household income is wrong, first of all, I would like to address whether an organization should be, whether you would suggest that there should be a regulatory set qualifying limit, or should each organization be able to choose what segment of customers it want to serve and what sort of qualifying assets, what sort of assets it wants to call microfinance and non-microfinance. I mean, should there be a limit at all in the first place? That's the question.
Household income, I agree with madam, but it should not be a fixed criteria because this income and all criteria will differ from geography to geography. Suppose you can't take income of 2 lakh in Bastar district and 2 lakh in some developed district in Sa-Dhan. So we have to see, Sa-Dhan has to work and on this household. Although RBI has prescribed how to assess this for all these, how to assess income, but detailed analysis is yet to be done. Regarding this study, we had one discussion with one agency regarding whether artificial intelligence can help in this. So they were telling we can assess all these borrowers' criteria, but whether it is, they are also not telling. We have so many applications, so many companies. If you tell, so many things are required, just like KYC. One will tell, I will give you all these KYC related, but if you tell I want risk assessment also, KYC risk assessment, then if I want CTR, STR, then they will know, then you will have to take other API. So for a small MFI, whether is it possible? And regarding qualifying assets criteria, of course, for viability, if you are lending to non-qualifying assets, then your income will be higher. But for MFI license, or as already Sri Kumar sir has told, that at least we should finance more than 50%. So we have to look into all these aspects, and I think Sa-Dhan and MFIN will be the best to define all these criteria, and they are already doing.
Thank you, Mr. Mohan. So, if you look at small finance bank, I think you have similar 75% private sector lending limits. How has been your experience meeting that? Has it constrained business opportunities or customer requirements in any manner? I'll just ask Sneha to take this question.
Basic and the main criteria of being 50%, more than 50% of the financial assets that we have to go. So the keen focus goes with the quarterly and audits and the financial checks that we balance in the system and economy. So everything has to be kept parallelly. If you also talk about like NBFC and the finance sector being focused on the SLR, the CRR, what the bank is maintaining and how forward bank is going ahead with them. So every ratio are made with the CRR, the cash, however it is being handled, and the policies which we adequately maintain. So taking these financials, like if we take a very small sector also about the house loans, yeah, the financing of the underprivileged upcoming small women's NGO or something like that. So in the policy sector also, if we start, so going forward with the management level, the board level and everything, so we basically take it in a way that to improvise the additional feedbacks from our customers and to taking it forward and then deciding upon the borrowing limits, the policies, and then also keeping it adapt with whatever RBI guidelines and maintaining a proper checks and balances with the compliance. So that is a gap that we as a FinCare try to build in and like nurture between what is exactly the need of our customer and how to take it in a good compliance way handled by the RBI guidelines and the SEBI norms and everything going forward.
Thank you. If I can, microfinance portfolio as part of the overall customer offering, how has your experience and learning curve been in terms of household income assessment?
Within 3 minutes I will complete yours. Okay. So the first point is 75% and 50% kind of thing. We should understand again what exactly is the approach of the RBI. While giving license to NBFC MFI specifically to convert themselves into or migrate themselves into a small finance bank, RBI is very clear that they did not want to create another sort of ICICIs or HDFCs or Kotak's of the world. They wanted to very clearly tell those new banks that we want you to concentrate in this segment. So that, how it can be done, they created some percentages, some thresholds, some caps and all. So this 75%, 50% kind of thing, and again 25% unbanked rurals and this, these are all very clear indicators and directions which has been given by the RBI, and in that thought process RBI is very correct and they are very clear. So let us not, we might be having a different opinion sometimes, but RBI wanted a certain set of differentiated banks to be there. So to that extent it is correct. And SFBs during the last 6-7 years they have proven this point also. Okay. Second point, coming to this 3 lakh kind of criteria. See, again the regulator was very much concerned about the growing indebtedness in the system, especially in that bottom of the pyramid, which was at some point of time going beyond the control of anyone for that matter. A lot of players came into the picture, regulated players, unregulated players, banks, new gen, old gen, everyone came into the picture. How to regulate this? Might be, I believe RBI has also come up with some kind of an experiment by fixing it 3 lakhs. It is not that, it is an evolving phase again. It is not that RBI would go, my belief is that RBI will not go always with this 3 lakh, 50% FOIR kind of thing. RBI is also going on a consultative mode. So it is our responsibility as people working in this field. I am sure that Dr. Gigi Ma'am has told that Sa-Dhan is coming up with some consultative paper on that. So that way it is our responsibility to engage with the RBI and come up with some, better solutions in future. Let us not be very worried about those. It's all evolving. It's all evolving. We are on a curve. Definitely in another 1, 2, 3 years time, we can definitely, because it is, and we don't have data. Invariably we don't have data. So what we can do? We can rely upon our own experience. Correct? That is how RBI is looking at it. So, and RBI is there with us.
You have been working with, have you seen any situations where this qualifying assets norm has not been met? And what's been the RBI's approach on this? Is it something which RBI is very particular about, or it's a little liberal about?
Sir, this will be all times. 75% is also there, but they are giving initially, they are giving that type of warnings and other things. Within that, they are expected to do that one. In my opinion, what I feel that one of the factors that one thing is that the management also will be skeptical about maintaining of 75% because as said, it may not be very much profitable. That is one of the factors. And other one or two things are that since we are making a subjective assessment with regard to annual income, and the chances of the people leaving the employment, that is their employment goes, and because of that the drop of income, and they are not able to make the payments, repayments in time, that will also deteriorate your asset. So these chances are there. This is the way the challenge is there. So continuous monitoring from the MFI, they will be able to this one. Effective as well, if there are set guidelines, your borrowers are employed, educated, all these things, you will not face much problem. Here what happens, they have to work with, there are so many RBI guidelines are there, but at the same time they have to work with the people who do not have much knowledge that one. So MFIs are having challenges in that. So effectively, as the committee with that, this proper, how to fix that family, that is household income, those criterion and all, if it is fixed, it will be better.
It should be while assessing the household income and the limits is being set probably with the best of intentions. There is it's an evolving scenario, but RBI has some clear thought process while setting these, whether it's a priority sector limits or a qualifying loans or a foreign limits.
Just 1 second start on that, about this 25 lakh limit and all. RBI might be again looking at whether these microfinance, SFB, small finance banks are having the required capability to assess that kind of loans and advances. So that also it is again a curve.
So this evolution will happen along with the evolution and the evolvement of the capabilities of the lending organizations, specifically the microfinance and the small finance banks, where, as they pointed out, specific roles in the overall lending landscape has been the eyes of the RBI as far as we are concerned. So with that, I just move to the next question. Again, a very specific question, a topic of significant focus in the recent times. I think we all know that in the recent March 2022 circular, RBI has sort of liberalized pricing in the sense we moved away to a limit 10 or 12% limit, especially with the NBFC MFIs, to a open price, board approved pricing policy. Overall in the direction of a lighter regulation, more customer orientation of the RBI. So what's your, and RBI has in the recent past been nudging organizations to move towards lower, more customer friendly lending rates considering the price sensitive nature of the customers we serve. So I just leave this question to the panel to share their experiences in terms of what sort of issues they have had within their organization in terms of determining lending rates, business versus compliance versus overall board involvement in terms of setting the lending rates. Anything you would like to add to that? I'll just start with Maya first.
The interest rate, it comes under the pricing of credit. As I mentioned earlier, RBI has had an inspection last week in our registered office, and it was mainly focused on the pricing of credit. So we have a board approved policy, and our interest rates are at 24% right now, and we charge 24% across every loans. There's no 22, 23 or something, it's all 24%. And we have a board approved policy which mentions the operations cost and the finance cost, etc. Now RBI has come up with that, like our operational costs are much higher, but we can't help it because our tech costs are there, administration costs are there, then salaries are there. So we can't cut down any cost anywhere. So still we are looking on to discussion. I'm discussing with the board of directors to do something on that. And then RBI has suggested us or told us to look into, like, if we are charging 24% across every loans, so can we reduce, like, can we make 23% to some of our customers who are good, who are repaying their loans on time without any default? So we are looking on to that also. But regarding the cost side, like small NBFCs, if they have a good tech platform, a huge cost is incurred in that area, as well as the salaries, as mentioned in the earlier panel, the minimum wages and all. If we give a good pay to our collection officers and incentives, bonus, etc., one of the huge costs is our employee cost. So still we are having discussions internally to cut down our operational cost, as RBI has come up with that.
Supported by NABARD, strong support in terms of borrowing rates, etc. So what is your view on, the different organizations having different interest rates in the market, depending on, as she rightly pointed out, different operating cost structures, different cost of borrowing, different credit costs depending on the markets they are operating. Any views from you on this? Should there be one lending rate?
Deregulation of interest was in the interest of borrowers, so that MFIs can lend it to the remotest nook and corner of the country. But of late, RBI is now raising eyebrows. Some institutions are charging higher rate of interest. So we are a subsidiary of NABARD, and we are subjected to so many inspections and audit. RBI is inspecting every year, NABARD is inspecting every year, CAG is auditing also, then GG sir is doing all these things. So many inspections and compliances, and we are almost having all policies. So after every inspection we will incorporate 1-2 policy. So this is also, as per the RBI, we have fixed floor rate. So our interest rate is, board was always asking, your your intention is not profit. So please reduce your, and our chairman award also top most of team of my institution are bring it down. So we brought it down to 19.9%. So we just we have slightly reduced the cap on ROA, and our OPEX is 6% roughly. Of course, our borrowing cost is around 9%. So we have been able to. Our motto is not profit earning, and dividend is not a priority for us. Although we have given dividend, but dividend, just like private sector MFI, dividend is the priority. But because if you don't give dividend, then investors interest has to be given. So that is how we are reducing, and we are one of the lowest lending rate we are having.
Thank you. So they would like to, in terms of how you set pricing of the loans, specifically microfinance loans.
So we see this from 8.85 to maybe 25-26%, and even in microfinance piece also it may be from 18 to 26%, which basing on the purpose, basing on the cycle of lending, all those things. But again, see, when RBI says something, it is definitely a suggestive direction. So now RBI is having a concern. It seems that there is lending, fixing of the interest rate process is not being properly worked out by SFBs as well as MFS. This is what we could get from their approach, right? So even as my fellow panelist was telling, nowadays RBI is taking a lot of details and undertaking some sort of inspection audits on the fixing of interest rates, specifically on microfinance, and computations are being specifically asked. I don't think RBI will be in a deregulated situation. The regulator may come and say that no, you cap at this level, maybe all in cost at this level kind of thing. I don't think that, because that is not the direction in which the whole industry is moving. But having said that, definitely the regulator will ask the details of the computation, and they may, if at all they may find out some kind of a discrepancy, they may question ourselves. So if you are able to clearly mention, this is my risk premium, credit cost, right? And this is my other, on the operational part and other kind of, this is a spread which we are going to. If you have clear computational details with you, then I think regulator may agree, otherwise regulator may question your stance. This is what we are looking at right now. So we are also keeping our thing. We are definitely having, as a bank, we are having a relook on the whole process, and definitely our cost of funds have come down in the last few years, so we are looking at it. At the same time, on the computational part also, we are keeping robust.
You do other products beyond microfinance. So is there any policy on pricing for other products also that you follow, or is it just for the microfinance? You need to have a RBI guidelines and policies for that.
SFBs have been touched by us, RBI in the recent months with the IFI audits and everything going on forward. So we have an overall policy, and we have an overall boring charters, specifically financed on our products, what are the products and how we are going forward, because after meeting the SSM and the top level management team with the RBI also taking FinCare and its employee as well as its stakeholders at cost. So we maintain a very conservative kind of an approach. We go forward, taking it like whatever is the interest rate best can be done, but also like adding on to what Maya said, all the operations cost plus fixed plus variable cost also to run a bank, to run a sector. Because our ultimate motive is also to help the customers in the growing sector and to help others coming us for the lending purpose and everything. So all the fixed, and we go with an approach that keeping in mind with the RBI growth structures and the policies, we frame such charters which are audited and reviewed by the management level, board level and also the senior level. And then with all the observations, and I would like to add what Sarah said, that RBI always suggests us. So our approach has always to be whatever RBI is pointing out, it is not an observation. Only it comes with the terminology as observation. But it is not an observation. What we have seen and what I have personally dealt with RBI is that RBI also always comes with advisories and suggestive notes. That is a suggestion for us to take it forward, going forward, in how we can just add on running parallelly both the industry and the growth of the economy?
Interest rate. The primary factor is the cost of funds. So depending upon the cost of funds only, the management will be able to fix it. Some, it depends upon, some may be able to get a low cost. Say for example, State Bank of India can offer a lesser when compared to others because they are having more. Now only they have just spread to other people. So like this one, cost of funds is not the factor, and the staff administrative cost and other compliance costs, including that one, engaging the consultant, all these things are major factors. But accordingly, as far as normal commercial banks are and all, it will be either the labor rate and then PLR plus the prime lending rate plus all these things. Here what is mainly, they move to MCLR, that is marginal cost lending rates. Like this, here also two factors will be mainly. Only that one, what is the cost it is arrived for you, including everything, and what is the market expectations. So to be competitive, you have to also reduce the rate to such an extent your margin is not reduced. This factor has to be done. And as Madam has told, only one point, RBI normally comes with a suggestion initially, then they will include a part of agenda when they just go for the next audit. Thank you.
Suggestive and not prescriptive or mandating interest rates. I think the overall intent is to ensure that the pricing has been set with the full knowledge and full working of the details of the pricing, and with key stakeholders being involved. I think that's broadly the session. And also another point that came out is the smaller players, because of higher operating costs and higher borrowing costs, as well as if you are operating in markets where the credit costs are higher, you have a challenge in terms of meeting your the return on asset expectations while maintaining the pricing. With that,
we definitely may have to keep, all of us, we may have to keep a document, board approved document policy ready with all granularity and nitty-gritties.
Very, very important.
That will be very important.
Yeah.
So you have to look, if you look into this, your rate of interest will be much higher, because you have to provide for all these capital adequacy, tier 1, tier 2 capital, or everything. So, and then this 125% risk was for uncollateral loans. This is also going to be one of the factors.
Add to the cost. So with that, I just move to the last question I have for the panel. I think the recent January 31st circular, I think I just read out verbatim what the RBI circular pointed out, that there is a need to implement comprehensive, integrated, enterprise-wide, workflow-based solutions for effectiveness of the compliance function. Similarly, there is a need for effective communication and collaboration with the top management. And I think effectively RBI says business, compliance and IT have to come as one platform when it comes to building the compliance function. So having said that, the question I pose to the panel is, if the whole management has to think compliance, so there has to be a change, not just from the compliance officer, but there has to be, the burden of compliance cannot be just of the compliance officer, but obviously of the whole team. So compliance as a culture is what it looks like it has to be going forward. So would you like to add, so Dave, I'll start with you, can you just add, can you just share your views on how compliance can be a team goal and not just a compliance officer?
So as RBI always says, that all compliance, it is everyone's responsibility to see that our organization is a compliance. It's not only boards or MDC or senior management. Having said that, the tone come from the top. RBI always says that tone from the top is very important, right? Then we can add, we used to add one or two things more, the mood at the middle and the buying at the bottom or buying at the front end. These are all very important. So everyone is very important. Everyone's perspective is very important. I would like to add one more point in this. The role of the CCO is how it becomes important is that you should be constantly, a CCO should be constantly engaging with all the stakeholders, and we should be proactively seeing as to whether any risk is building up in the system. RBI, it is not only regarding the regulatory kind of piece. If, say, RBI may suddenly come and ask you why your delinquency rates are going up. Do you have any kind of analysis? Have you done an RCA? In which rate of your delinquency rates are going up? What exactly is the reason? Have you put a system in place to control this? If the CCO is not aware of this, then you will draw a blank, right? Which the RBI may not be agreeable with. So my request to all especially my young friends is to see that you are having a view on all. Sometimes the management may see that you are poking your nose too much into other things. Let it be there. It is our our dharma. We cannot deviate from that. Please do that. Please have an eye on all this, on the IT, on the infosec part, on the delinquency part, all this. Now, how to do this? There is a problem in this. That is why now RBI told that it is not humanly possible to have a view on across all those things if you are having a manual kind of system or the earlier whatever used archaical kind of system kind of thing. So then they told you come up with a automation in this. So in our bank, 2-3 processes we are automating. For example, dissemination of knowledge. We are sending the circulars, our internal circulars. It will be going to each and every employee and with some access controls. Everyone may not be seeing all the circulars. Then we will be able to generate a dashboard as to whether how many people have seen this kind of thing. I want to see that how much time they have dwelt upon that. That is next step. We will do that. So these kind of checks you can on the part of dissemination you can bring in, right? So critical, then the circular management tool, then your FRM tool. So lot many tools we can bring into. RBI wants to see that it is automated by and large. One more last point. The present circular is just again a prescriptive kind of thing only. It has not gone into the details. So we are as a SFB, we are having an organization, ASFB, Association of SFBs of India. As a group, we are engaging with all the big fours and other people for getting their solutions, their applications and all. None of the applications or solutions are fully taking care of the requirements. And this circular results, a prescriptive kind of circular, suggestive kind of circular only, nitty-gritties and granularities has not been brought into. So again, it is an evolving stage. I think that's the best thing which we can do. That is the only way we can do that, and the senior management also should be engaged into that. One last point to my friends again, please start asking questions wherever it is required. If it is to the senior management, your own colleagues, please asking questions. I am not asking you to, snub people. It's not like that. You ask pertinent questions in the forums. That is what your role is. Without your business. So, the front end, no, that is definitely, it is very, very important. Just 5 seconds I will take. In our bank, some very senior went to to open a current account through our involvement, through our Pathshala kind of every month we are doing some classes, online class and people start speaking in terms of compliance. Please see that your people at the boy or girl sitting at the front end start speaking in terms of compliance, then your job is done.
Thank you, sir. You've been able to build your organization has been able to work on building a compliance culture.
Like being the compliance officers, may it be a company secretary, may it be CCOs, or may it be compliance officers of any organization. So we are basically appointed by the organization to protect the organization. So we are from those ends, like we have to align in such a way and in such a manner that first this is a simple baseline that I start with. I sit with my management, like what is management right now doing, because I know the backgrounds and the checks and levels and balances about the circulars, the updates, and then we need to plan it out to how to take it way forward, so that nothing is like a cakewalk whenever you are on the compliance section side, but you have to make the person sitting on the front dais to understand. It is a very difficult task for you, and like most will agree, to make the board understand, plus the top level management, the senior level management, as well as parallelly always make the RBI or the regulators to understand, to keep them in a same parallel. They will never be in a same parallel like our fingers of our hand. Everyone will have a different view, different approach. Our board always comes up with suggestions, ma'am, we need this funding, we need it done. We have to make it line parallelly with, no sir, this is the advisory, this is the section, this is suggestions, we have to provide. From this section we have to lower down and we have to go forward. So we have a proper designated team in our bank. So they sent us they sent to the entire employee from 0 level to X level. Everyone, the compliance advisory checklist have been gone, and then all the checklists and the recent amendment circulars have been circulated, and then in an open house forum, our MD specifically takes out time and he asks open questions. If someone has questions plus suggestions and views of how to incorporate those things, and also should we, not mandatorily, because we all comply with whatever is mandated here, so yes, that we will do. But what about the things we should add on as a voluntary approach to taking our bank or taking the entire system or the sector as a whole? Because what I faced and learned with RBI is that whenever the circular or advisory comes about, there are two things for the company secretaries and us to take to the board level. RBI always comes with the favorite word of RBI is board of directors. Ma'am, is the board of directors aware about it? Has it been taken to the board level? What is the board for? So their thing is the board. Because the stakeholders and shareholders are the in-house of the company, but the board of directors are the main seniors, like our grandparents and grandfathers, I would like to add on, who shows us the right path and the work, because they are learned from all over the sectors. There is no particular qualification or criteria to be a board of directors, but it has to be a person of expertise with a financial sound knowledge and how to take things forward. So RBI focuses on that end that ma'am has been taken to a board level. Now whenever a circular or advisory comes, there are two things which we take to the board approval. Being a CS, we asked two questions. Sir, is it for approval item or a noting item? So when it is an approval item that we put to the board level, is something RBI wants us to get approved because that is being followed in our company. Even if it's a very small advisory or coming up with a charter or a policy, suppose any defaulters list or anything it comes, they ask for an approval. But the advisories and the compliance which RBI is trying to keep us with an adept knowledge is that they are like, we advise all the SFBs to take note in their board level. Maybe RBI is having a very decent approach, they don't ask or force us to take it to the board meeting because it's very difficult to call and like align and assign for a board meeting every then and then by the circular, but they make sure that it has been passed to a resolution by circulation. The only intent of RBI and the law is people should be aware what is the thing and how to things take forward. So this is a noting item like what I have felt and going forward.
Thank you, Sneha. I'll just come to Maya. So, small and emerging lending institution, what has been your experience in terms of building an cultural compliance culture? Has it come in the way of business? Have you found it difficult to manage?
Collection officers or the field officers are the front end of the company who meet our customers, who directly have contact with the customers. So starting from the way they dress up and go to the collection, the way they speak, the way they speak with the colleagues in the office, they never say like Eda Poda and all, they always say Madam, Sir and all. And starting from the branch, the entrance of the branch, as all of us know, like the name boards, the notice boards, everything. It's in line, and as a surprise, when RBI people coming for the inspection last week, the ma'am just asked me to call two of our branches of her choice. She just told me to do a video call, and I want to see the branch, the notice board, everything. So it was a sudden surprise, and she was just zooming in the photographs and all of the FPC, is it in the vernacular language and everything. And apart from that, the Chennai, we come under the RBI Chennai, and RBI, the Chennai RBI, they always do training programs for the compliance officers, directors, as well as the operation heads. So as a small organization, I make sure that any one of our director, we have only 4, any one of our director at least attend the RBI thing, so that they can, they will be more aware of the compliances and all, and as well as the operation heads. Then apart from that, to the field officers, we give the compliance thing with our training heads.
The public sector undertaking, what sort of challenges you face in terms of compliance? Do you have over compliance, or is there an issue? Do you see any such issues in your office?
I will give one example. For example, I think someone has referred this. We have policy for branch opening, but we didn't have policy for closure policy. But we were having SOP. So RBI has observed that you don't have policy for branch closure. So we told we are already having SOPs, we are taking approval. No, you don't have policy. So we incorporated in the next board meeting. Similarly, CAG observations are mostly related to this funding from NABARD or other agencies, so there was no other observations. NABARD inspection is of course our internal, so we can't say that, but of course it has helped in improving so many, we have brought out so many policies. We are already having cost policies, procurement policies, so everything we have to, our compliance officer has to submit. Procurement, any procurement we have to file to our, she is handling with all departments of NABARD. Some department will be looking after this compliance, this. Apart from these RBI, NCA, other things. So, vigilance, for example, CVC returns. Also we have brought out CV vigilance policy. So this has helped and sensitized our staff also. So, and we are including all these in our training manual also. So this has helped the culture and this has helped in reduction of incidents.
So with that, I would like to close the panel discussion, and in the interest of time, I will leave. I'll give it to the floor for any questions that they may want to have the panel, but I'll just request to keep it to only one or two questions.
Categorizing your risk categorization for the KYC perspective. When you're doing the lending in the MFI sector, like all of the members to whom you are lending are having the same kind of presence, like the similar kind of incomes and the practice and the operation, the occupation, you can say. So how you can differentiate in the risk categorization, that is the expectation from the RBI side, but I have experience in the recent inspection.
Most of the borrowers are coming under low risk, and it is to be done as per revised policy after 10 years. I find right. Only high risk category KYC has to be done after 2 years. So that will be mostly institutional lending. But still, if there is NPA in some area, you have to categorize it. Low risk. There is no clear-cut practice in some of the, but banks are doing this. So I think I will request GG sir to just give one SOPs or something, FAQs, how to categorize, because there is some confusion, but as per guidelines, 2 years, 8 years and 10, most of the borrowers are under low risk, so no, we are not categorizing after 2 years, but still there is a need to look geography-wise, borrower-wise risk categorization, because once it is a loan is NPA particular customer, then it will be medium risk or it will move to high risk. Suppose your branch is a low risk, it has moved to medium risk. So we have to prepare one circular internal committee, and Sa-Dhan may also guide.
Guidelines are there from IBA. IBA has come out with a guideline as to how to calculate, and suggestive guidelines are there. We can use that one. And generally banks are doing this at the time of onboarding, not at the time of giving the loan. Because the customer will be categorized for risk in 2 ways. One is onboarding risk, then the transaction monitoring risk, right? Transaction monitoring risk will happen on a later day. I will come to that part. So onboarding risk, 3 or 5 or 7 kind of parameters you can take. That parameters IBA has come up with some suggestive parameters on that. It is very much available on IBA site also. We can take that. Then as to how to build it into your system, that you need to see. How the system will pick it up. When you are giving a drop down, say for example occupation, which are RBI has told that a housewife can be treated as a low risk, while a gem and jewelry dealer will be a high risk customer. So whether your system should be, onboarding system should be equipped to pick up this, right? Then if an NRI customer, generally initially they used to classify them as a high risk, but now banks are classifying NRIs as a medium risk kind of customer. So basing on occupation, then income levels, then illiterate or otherwise. An illiterate customer is a high risk customer. You know why? It's very much gullible. So these kind of parameters IB has come up with. Your system should be properly equipped to pick up this. That is one point. Second point, on the transaction monitoring part, banks are doing like this. Transaction monitoring, there is a huge rule engine will be running on the transaction part. Every day, lakhs and lakhs of transaction dump will be fed into that system, and any rule engine you can fix into that. That is available in the market. For example, a customer is coming 1,000 rupees, 20 credits immediately came, and somewhere it has been 20,000 rupees have been removed. Taken out in different locations. This is a trigger. These kind of any number of rule engine you can bring it. Basing on that, a transaction based risk categorization also you can do. What RBI says that customer risk categorization, this transaction you will have to do at least once in 6 months. Then your onboarding customer risk categorization will have to be revised basing on the transaction risk, right? And highest of these two will be the customer risk. So it is a well settled rules are available. Only thing is that we need to equip without, I am telling you, without a system it is very, very difficult.
The person who is aware appointing CS, and can we appoint us to him as a CCO role, or we have to appoint different employee as a CCO, or we can appoint same person as a CCO role?
So let me apologetically say one thing as regard to NBS and 2021, another FAQ is very clear on that, and CCO should be having 15 years of experience in banking, of which 5 years should be related to audit, compliance, legal kind of thing, and he should be having he should be minimum one level below the MD or CEO. No, there should not be any. Should not be very below that, because assertiveness is required, independence is required, sufficient stature is required in the system. So very clear guidelines RBI has come up, and 2022 RBI has given some below 55 years of age, and 2022 RBI has come up with 1 or 2 slight clarifications on this one. So very clear guideline, very monitorable, kind of clear guidelines are available. On the NBFC part, I think I need to.
Shipper would like to add on the NBFC part. Is there any such restriction?
With the business decision making committees.
Exactly.
That is very clear.
The operations, audit, compliance have to be separate. They have to, that is the main criteria.
So I am having another 2 questions. One is how we are reporting NESL reporting, National E-Governance Service Limited, the microfinance customers, how we report to NESL?
I think we need to check it internally. I think there is some amount capping that's not for the GST purpose.
What are the factors we are considering to identify the STR, CTR and the suspicious transaction reporting? What are the factors we have to consider?
So again, as regard to STR, it is again exposure and competencies. There is nothing told that this is a suspicious transaction. This is not. As I told earlier, if Sa-Dhan says these many credits are coming in different parts of the world and somebody is removing that is again a suspicion. So lot many triggers will come from this, and then our team will go through that. Sometimes manually we will have to go through that, because there is FRM, EFRM, everything, tools are available. So manually we need to go through that, and it is up to your that bank's wisdom to see that whether this is suspicious or not. At some point of time, RBI has asked us. RBI told us that initially you need to tweak your STR identification process, because you are coming up with too many STRs. This much STRs cannot be there. So we have to tweak in again that. So it is all again a maturity curve of the organization. There is exactly this is a suspicious, this is not suspicious, but there are set patterns kind of things.
I can add into this only.
Yeah.
As per the KYC direction, you can just add policy. They just see the policy, they don't see any other document. So you have to clearly define in your KYC ML policy what is suspicious, what is not. So this will serve your purpose.
So with regard to bank, CFT guideline for that one, they are fixing the parameters. Say for example, there is a person with a small, that is income criteria of say 30,000 rupees. Suddenly some 5 lakhs, 10 lakhs it is coming, going like this. It is set in the parameter itself. As far as MFIs are concerned, that has to be, because it also requires, we are doing with regard to, we can just make manually we are doing this activity. For that, doing that one, it requires a computer, that is, automation under the computer station, for which MFIs have to be equipped with the funding sources to do that activity. But ultimately it has to happen. Because one of the things the banks, as far as the certain, not good customers, I can say that one. Instead, they have got so many checks and balances with regard to banks. They will try to use it with the MFI, because currently also many of the MIs they do with the manual checking. But in considering the volume and all, way forward, we have to go for automation with the software checkings. Thanks.
Thank you. With that, I would like to thank all the panelists here who have contributed their valuable insights and made the discussion very meaningful. Second, I would like to thank all the audience out here who have been very patient and who have been very much part of this proceedings. And thank you, Sa-Dhan, and thank you, Acme, sir, for this wonderful opportunity to me and to all the panelists to come and talk to me. Thank you.
On token of thanks to our
before we close, just wanted to give only one slide from our side. That is, what are the expectations we have from the members as an SRO, as an association, what are the expectations we have. Of course, first is the quarterly data reporting to SRO, because you know that as an SRO we have to provide regular data and information to Reserve Bank of India. So there's a structured reporting system to Reserve Bank of India. So for which we need the information from the MFIs on a regular basis. So we are reporting to SRO the financial and operational data and also the audited financial report. These are very important as far as reporting is concerned. Then secondly is that, see, we have been seeing in the operations of the microfinance, there are issues. There are issues maybe in the ecosystem, issues in the with some of the competing institutions. So whatever issues you are finding in the field, or some of the practical problems you are facing in the field, please bring it to the notice of SRO. So as you know that we have a regular interaction with Reserve Bank of India and government. So whatever is possible, we will be in a position to take up at the appropriate authorities. Whatever queries or observations which we are making as an SRO, I would request you to keep that in the highest priority, because we are asking the information on behalf of the regulator. Since a self-regulator, under the self-regulatory mechanism, you know that it's basically a kind of outsourcing which RBI has done to us. So we are doing it on behalf of RBI. Please ensure that that is done. code of conduct is an important thing which everyone knows that. So adhering to the code of conduct is an important thing. For information, you must have all of you must have received two set of posters which we have recently prepared. One is to educate the loan officers of the MFIs about the code of conduct and their kind of behavior to the clients. That is one. Second one is basically financial awareness or the literacy or some kind of a knowledge imparting to the clients. These two posters are very important. I would request you to see. We want it should be a joint venture. It is not only the Sa-Dhan or SRO is going to thrust about this to the MFI. So that's why we have said that it should have a joint logo, one Sa-Dhan logo as well as one your logo. So please put that and please print out and take sufficient copies so that it can be displayed in all your branches and all your offices. Yeah, that is an issue again and again which is coming up, which we had discussion here also. When we are doing the business, yes, we have to do business. We need to get profits, but it should not be profiteering. It should be a sustainable growth. That is what we should be looking at. If that is to be achieved, we have to be mindful about what is our cost of funds, our cost of operations, our lending cost, what is the surplus we are having, what is the return on assets, what is the return on equity. You have a review of this on a regular basis. It's good to have the policy, and there should be a policy, and which policy should be reviewed on a regular basis. Actually, the policies which are formed, it's not a one-time exercise. It has to be reviewed every year, and whatever modification, whatever improvement to be made, that should be done. Similarly, regarding fixing of cost, the pricing of the loan amount, that should also be an ongoing process. It should be done on a regular basis by your ALCO or by your management team, so that there will be some dynamicity in this aspect, because cost will keep going up and down, but then it has to reflect the true picture. Training and capacity building is the most important aspect, which I mentioned in the morning also, because one of the things which you are missing out is, in the morning also Sullivan sir mentioned about that. See, basically MFI operation is a social enterprise. It's also a financial business, but first it is a social enterprise. But slowly that social enterprise part is getting slowly eroded off. If you see the older generation MFIs, they were all NGOs. For example, for the ISAF which we are having here, or Ujjivan for that matter, or Gramin Kota who is there in our city itself. All these are bigger MFIs or SFBs. They all formed as NGOs first, then they formed into a financial intermediary, and then an MFI and a SFB. But some of them still hold on to their original DNA. They still have the developmental angle in there. But many of the other institutions, some of the newer institutions, I find that probably that is missing out. And this can be possible only by bringing entire, like we said about the compliance, has to be a culture. A culture of compliance has to be created. Similarly, a culture of developmental approach has to be created within the organization. That can be done only through training and imparting the right kind of messages. So I'm sure you will be going back with all these messages. I will not take in time. In fact, I'm really thankful to all of you, especially the two panels which we had here. In fact, I was really happy to see that the general mood in the panel discussion was that this compliance, whatever the regulations or the stipulations which various authorities have, including Reserve Bank of India, are all, I find that I'm really happy to see that panel members were feeling that it is a need for the organization, need for the sector. Everyone was appreciating. Nobody wanted to accuse that RBI is putting a lot of pressure or other authorities putting a lot of pressure. Everyone was feeling that that was need of the hour and it has to be followed upon. I am sure this is a very, very, very strong message. And another message which was that the cost of compliance is lesser than the non-compliance. I think that's a catchy word. I think that should be our last word for the day. So with this I conclude here. I thank each one of you for being here and actively participating in this half a day conclave. I'm sure you must have learned a bit of it. Please, we will be circulating the presentation, whatever we have got, we will be circulating to you. If you need any further information, please call up. You can contact us. And couple of things which are given to us as our task, especially regarding the tax part of the stamp duty part of it. Then again that IT policy which you have talked about, we will be working on that. Thank you so much and all the best to all of you. Have a great day. There is a LENTEC 10 2020-24. That's a seminar, that's a one-day conference being organized by LENTEC, B2B, which is partnered by DLAI, FIDC, Sa-Dhan and ACME. All our associations are partnering with that. It's a fintech related program, unleashing the future of digital lending and payments. So this is being held in Hotel Ashok, Ladit Ashok, and starts at 9 o'clock. So, what is it? Ekanki Sharma. Ms. Ekanki Sharma from B2B is here with us, so you can just be in touch with her, and I would request some of you to please take part in that one-day conference. Thank you. Ekanki, you can write yourself. You can talk to them and.
I would like to stand between you guys and your lunch, but it will be great if all of you would be a part of that. If anybody would like to join, I'm here. I can come and talk to you. I can share the agenda also with you. It's in the Lalit show tomorrow. Thank you so much.